government may be over-regulated. And if that kind of eases off a bit, I think financials could give you a great opportunity, at least from a domestic economy facing point of view. Other than that, as I said, nothing changes from 4 days ago. We continue to look at local markets the way they ought to be looked at, not necessarily in a global context.
What do you feel about consumption? Jakes, you talked about how you think banks may be in a good place right now, but do you feel like the worst is probably behind the consumption space? The reason I ask is because while earnings were not so strong, commentary from most of them sounds pretty promising.
Well, I think the consumption has been an area of concern, linked to which has been, the proliferation of cards and whether people have been, having consumption through borrowed means, if you will. I think we are still under-leveraged as an economy, so that's not such a worry. There will be periods when the noise around this will reach a crescendo, which has been the case. Maybe 1 quarter more, and consumption should slowly inch back. I'm not a great believer in the fact that that Indian consumption is going to be sort of challenged. At the same time, I don't believe it's going to be the way forward. So consumption-oriented stories are not going to be necessarily leading the next rally. Though I do believe that consumption will pick up maybe a quarter or 2 quarters down the road.
Okay, Jakes, what is the concern now? I mean, is it the earnings growth, or do you believe even that is passing if indeed the government spend comes back in the second half, which a lot of people say it will?
Well, it's been back-ended. Usually it's been front-loaded. In this particular year, it's been back-ended. And the second half, whether we like it or not, will be significantly higher than the first half. So if there's one engine that needs to fire right now, it is the government spending, which has been significant in the way it's been lacking in the first half. So there's no doubt from that perspective. I do believe that some amount of private sector capex needs to get constructed and created, which has also been lacking. But I've not seen the same zeal to create capex in the private sector space, as has been envisaged.
Mr. Jayakumar, just wondering what, as per you, would be the next big triggers for the Indian markets? I mean, right now, I know we're in the middle of a US election and all our focus is on that. But towards the end of this month, we come to a very, very key state election, which is of Maharashtra. Do domestic politics then come to the fore? Would that be a bit of a huge factor and possible headwind that markets would watch?
My own assessment is politics will come and go. They don't last beyond a couple of days, unless the outcome is so dramatically different from what was envisaged. Maharashtra is seen as a challenging state. If the ruling sort of dispensation does better than expected, we'll take it in our stride and move on. Unless the performance is disastrous, which I don't think will be the case. Therefore, if you take politics apart, keep it aside. I think there is no really next big trigger, as it were. I think the real trigger, if you will be in terms of, let's say, some easing off in certain pockets of the economy which have seen strife and stress. Maybe in the last elections, there was general talk that there'd be loan waivers, etc. So the MFI space was delinquent to a larger extent than was envisaged. I think that could ease off. Private sector capex could be a surprise plus. Government sector, infrastructure spend needs to happen, and it's largely been factored in. How much that will actually impact, because we've never had a year where the government spending has been so back-ended as it has been in this particular year. So keeping that in mind, I think we will meet with some tailwinds, or we will experience tailwinds into the next half. And to that extent, the markets, to my mind, have already bottomed out 3 to 6 months ahead of the actual tailwinds emerging. So you go back to stock picking, go back to boring reading of balance sheets, if that in fact is a trade that anybody still follows. But to the extent that some people still do, I think we go back to that. Low-hanging fruits probably aren't there. Thematic upsurges could happen. A worry could end up being a situation where it was raising money at a 15,000 crore market cap a year and a half ago and lists and trades at a 1 lakh crore market cap. those kind of things could happen. But that's also a function of novelty as much as it's a function of a new trend that the market's latched onto. But I don't see anything so substantially big that the next big trigger is waiting to happen. No, I don't think so.
Got it. Okay. Jakes, lovely talking to you as always, more so on such an important day. Thanks for taking the time out and being with us.
Thank you so much. Thanks for having me.
The pleasure was ours. Now let's cut across to Titan. After the numbers, the management spoke to us. Here are the slice of that conversation.
I think we were pretty satisfied with the growth number. And we all know that Indians love for gold, but in this quarter, it was far more pronounced. After custom duty cut, we saw, a lot of customers and consumers coming back and the wedding customers, etc. But preference has been more towards gold, jewelry, and gold coins also have gone up into the mix. While studded has been selling, but if you look at like to like, the percentage mix has come down by kind of 3%, and that has impacted margin. The gold high price reduces diamond jewelry margin to some extent because of the gold content there. All these have led to, and with the high prices of the gold, of course, every jeweler is trying to make it more attractive through offering exchange program or some kind of discounts on gold prices. So we also kind of have offered some of those schemes during the quarter. And this kind of trend looks like that it is going to be there for some more time. We have seen festive season extremely, again, well received and have gone very well. But the gold continues to dominate the theme. And that is what led us to kind of reduce our guidance for FY25, that 11 to 11.5% for jewelry EBIT margin seems to be more realistic for us to strive and deliver.
To the revenue growth outlook as well, because it was not just a strong quarter. I'm presuming the festive season plus the wedding season would ensure a strong quarter 3 too. But like I said, I wanted to get the one or two concerns out of the way first. For a mammoth company like Titan to lower their margin guidance means the competition is serious. Now my question to you is, or rather the discounting is serious by competition is what I mean to say. Would you reckon this could be short-lived, sir? Or could it last beyond a quarter or two as well? Any thoughts on this?
Very difficult to predict that, but what I believe more than competition at this point of time, it was the product mix which was impacting our margin, where gold is kind of, as I told you in the beginning, that people are preferring gold more over, to some extent, diamond jewelry. While diamond jewelry on a particular price point, we have talked about buyer growth, etc., have done extremely well. It is the high caratage solitaire where we are seeing some pressure, and people are still sitting on fence and waiting for the noise and price equation to settle down, which way the high caratage solitaire prices will go. Competition is, of course, there. It is slightly more at this point of time, and you need to kind of respond to that through some of the sometimes schemes and offer, and a little bit more advertising and marketing. But I don't think that's a major reason for at our scale to be calling out for reason for our margin decline.
Okay, so but the fact that you've lowered it to a slightly lower band. You're not too concerned. You think that's normal. It's about 100 basis points lower, right, than the band. It's effectively the result of the miss in quarter 2 itself, and therefore would the new normal still be higher than the band that you've given?
So FY25 next 2 quarters we are far more confident and visible. Margin is something, very, very sometimes difficult, while our scale now gives us leeway to pull many levers to kind of maintain and deliver a stable margin. But we still wanted to wait for 2 more quarters to give stability of margin guidance. And
Got it.
Yeah.
Okay. Now to the good part. I mean, the numbers, the revenue numbers look solid in quarter 2. I would presume that two festivals rolled into one in the current month itself, or the month gone by, would have meant that October might have been good. We are speaking after October. Give us some sense of whatever little you can about how good October was. And also, question two rolled into that is this. I was told by many garment manufacturers, Mr. Sonthalia, that this upcoming or ensuing wedding season is the longest that we've seen in Indian history. It will last till May, possibly even July. Would love to know how bullish are you on the upcoming next 2 or 3 quarters?
So, yeah, no, I think you are right that wedding season is much more stronger compared to earlier years this time. One is also that some of the wedding muhurts have also shifted towards this, like Q1 was very muted. And we also saw that once the gold prices cooled off because of custom duty reduction for some time, after that again they have gone up. But a lot of wedding buyers also came that point of time, rather waiting for 3-4 months closer to wedding. They kind of made their purchases in August, September before Shraddh period. And that was also reason for a good growth, which we have witnessed, or the industry has witnessed more than us. Going forward, Festive has gone extremely satisfying. We are very happy, not only for the jewelry, but across consumer categories. We are a lifestyle company, deal with many more categories. I think we are very, very happy with the way Festive of 31 days, which we count like to like, compared to last year 31 days, have gone very well. Momentum looks like continuing now on the back of wedding season have started, which would go up to 15 December to my mind. So we are very, very positive for Q3 growth.
Okay.
For sure, we believe Q4 also will not be disappointing to the industry or anyone else.
Noted. And that kind of maybe came out in the con call as well. Just one last question. This something has perplexed a lot of people. You, of course, stated that lab-grown diamonds are not having a material impact on the business. Could this have longer-term implications, Mr. Sonthalia? I mean, for no less than Trent, which is also a group company of the Tata Group, to come out and say that we are going to retail, lab-grown diamonds as well. Could it have a material impact on diamond demand over the long term? Or is it more like how imitation jewelry came in, that yes, it was a cheaper alternative, but people still stuck to original jewelry?
The preciousness, rarity, and the investment angle are still very strong for natural diamond and gold jewelry, which LGD somehow or the other not able to attain because of the continuous declining prices for that category. Having said that, LGD is not like the earlier CZ or Diamantine or those kind of thing. It is a good quality product grown in lab, have a good kind of attributes like diamond. But having said that, it's very difficult to project the trajectory. While we spoke about Trent getting into POM, and we also explained for a big box retailer, it is right for them to keep experimenting what the consumers who are walking in would like to do. And like we also do perfume, they do perfume. We do women's bag, they do women's bag. We do ethnic wear, tanera, salwar kameez, they do also that. But we are a category player. Whichever product we do, they are exclusive. We build brand. We do exclusive outlets for those categories. So there is a difference in approach, and that difference should be appreciated. Both companies are in a way free to pursue their strategies. And we are very, very keenly watching lab-grown diamond. Very difficult. Some of the questions which you are raising are the questions for us also to kind of have a clear view. And it's an important matter. And we will talk more when we are ready to talk more on this.
That was a very telling statement, Neeraj, at the end of your interview. We are keenly watching lab-grown diamonds, and we will talk when we're ready to talk. I just want to pull up a dual chart of Titan and Trent, if we can, because that point that Mr. Sonthalia made, that we do bags, they do bags, we do luxury women's wear, they do women's wear. They are now doing lab-grown diamonds. Titan does diamonds. a bit of that might be a problem. So you can see Titan there. I just want to pull up what's happening to Trent as well for a second, if we can. So Titan, of course, 3% plus down. Trent about 2%
but
up
off
today.
20% from all-time highs, Tamanna.
Yeah, I mean, of
Trent
course.
has had a massive pullback as well
Of course.
recently.
As of today, as of now.
Yeah,
All
yeah,
right. Something very interesting happening with the US elections. See the number on the top of your screen. Till a few minutes ago, I think 3-4 minutes ago, you had Harris at about 112. Now jumped to 179. The gap between Harris and Trump has narrowed. 2 states have come in, and that's one of the reasons. So their counting has come in fairly quickly. California and Washington have dropped together, which is why you are seeing a bit of the picture change. Trump is still leading, there's no doubt about it. I just want to pull up the Dow for a second because frankly, the biggest indicator right now, what's happening is the Dow futures. Keep a very, very sharp eye on the Dow futures. Dow futures still about 529 points up. So he's in the lead. Trump is still in the lead. Now, there are 2 scenarios here that we need to look at. One is that Trump wins the White House and his party, the Republicans, win Congress as well. That makes the path easier for Trump. And remember the Goldman Sachs outlook that in that case, where they win the White House and Congress, a 3% rise in S&P 500. Trump wins the White House, but not the Congress. Republicans don't win the Congress. That's 1.5% up. That's a bit of a negative there. Anyway, हमें क्या फर्क पड़ता है? That's really the question, and Harsh is joining us with more on that. Harsh, what's the impact for specific stocks and sectors here in India of the US elections?
Well, very interesting question there. Now, just in terms of if Harris wins, a renewed focus on renewables and policy stability. So both of those likely to get, or rather to aid stability overall. On the renewables front, renewed focus there would mean Premier Energies and Vari Energy could actually benefit as a result of this. But the real change will be if Trump wins, because plenty will change. One, it's good for the dollar, and which means a stronger dollar means better for exporters and therefore will likely benefit exporters going forward. Further, corporate tax rates could likely come off. A lower corporate tax rate likely to aid especially the IT pack, but outside of that, anyone having presence in the United States in terms of having chunky companies in the US, with of course listed entities in India having companies in the US, likely to benefit from this. The other one is higher tariffs. A higher tariff is bad for apparel, bad for chemical companies, something like a Wellspun, Gokaldas, Deepak Nitrite, Aarti Industries. Some of those will definitely see an impact if tariff hikes were to come under a new Trump regime. Insurance coverage. Now, this plenty spoken about this, even though non-committal. If Trump were to have his way completely, likely an adverse impact on pharma companies as a result of insurance coverage getting diluted for US citizens, and that could impact a whole host of pharma companies, from the likes of a Sun to the likes of a Lotus, all of which will see an impact. The economy otherwise, consumption as a basket, if at all policy were to change, more consumption friendly policies would continue, then you could well see auto and specialty chemicals come back to the fore, something like a Motherson, Tata Motors, JLR, to benefit from a consumption spree in the US. So we'll have to wait and watch as to how policy evolves.
Okay, thanks for that. Thanks for that, Harsh. So those are a set of names to watch out for. You know, this is quite interesting, simply because much as you want to focus only on what will happen to India, but there is and there are some unpredictables out here, right? Because as much as we would like to believe that tech companies will benefit, what if the H-1B visas, in the event of a red sweep, are curtailed down? So that's net a negative as well, or a negative, despite the fact that if there is a corporate tax cut, then people will spend more on BFSI. So larger trend remains, but there are sub-trends within these which are just so difficult to call, as would the case be with any political outcome, Tamanna, but more so when the contestants are what they are in the US currently.
But you know, look at Nifty IT right now, and just because you talked about IT, and we've broken this down for you, what a Trump win means for India. We're going with a Trump win right now because he's at 214, Kamala is at 179, and remember, some of these things, India at the end of the day is geopolitically a prominent nation, so whoever is president of the United States has to deal with India and will deal with India in a benign fashion.
Exactly.
So that's not an issue. I mean, the Biden administration has not been anti-India in any stretch of the imagination, especially on defense ties, etc. Having said that, for equity markets at least, a Trump win is a big positive because it's a positive for US markets, which is why we're constantly tracking the Dow futures. US markets will be seeing it as a positive. Indian markets are likely to follow. A stronger dollar, though, just to the point that you were making, Neeraj, about how it's a mixed bag, a stronger dollar, a bigger focus on manufacturing in the US also means foreign flows and global money now moves in the direction of the US. It will come to some extent at the cost from India. So it's a bit of a mixed bag there.
No, and in fact, that's such an important point, Tamanna, because aside of the natural business flows that happen, Trump election is reflationary. That means rates don't go down in the US. In fact, we might actually see rate hikes, as BOFA has said, as ITI-MF said, and we'll talk to Sridhar Sivaram about this as well in a bit. And therefore, what we've seen in October, which is a higher preempting or pre-positioning for a higher US interest rate scenario than what was perceived, might actually hurt flows in a meaningful way going ahead as well. Such an important point that you made.
You know, just the other point on, so that's equity markets, on trade. Trade is the other big one, right? And we've been talking about the IT sector, but on inflation, Trump is likely to increase tariffs across the board. Now, for India, this is interesting because a large number of products that we export to the US are already close to their highest tariffs. Remember, in Trump's first presidency, he hiked steel tariffs on Indian goods. He was not very excited about Indian bikes going to the US and said, but what are we sending to you? He might ram down the Tesla down our throat since Elon is his friend. So all of those scenarios play out. But higher tariffs means more inflation. Fed is in a tizzy. I don't know if Powell will survive. You might have a new Fed chair, and it's a bit negative for exports to the US from India.
There is one more direct implication, Tamanna, I wonder. Indian telcos. Does Elon Musk come into India and create an issue for internet providers in India?
No, but we have to let him come in.
Yeah.
Trump might say, Musk ko le lo, but we have to open our gates.
No.
So,
that is true for all decisions. We are right now doing conjectures, right? That this may happen as well.
Yes.
It is something that should watch out for.
Musk coming in completely. But just on the flip side, if Trump goes tough on China, opens up huge opportunities for India. We already saw the beginning of that with the Biosecure Act. Remember, Biosecure Act is a Democrat promise, not a Republican promise. That it could be negative for Indian pharma if Trump comes in, because he's not said he will do it. But the broader direction, don't prefer China, gives opportunity to India. So that remains. A Nifty pharma also 1% up. But let's come to tech stocks and IT companies, because look at the Nifty IT right now. Trump could cut corporate taxes across the board. He said he'll cut corporate taxes. That means more money for discretionary spends for companies in the US, and Indian IT companies benefit from that. On the other hand, historically, Republicans give fewer H-1B visas than Democrats do. So that's a negative for Indian IT companies. Having said that, our company's dependence on H-1B visas has reduced over the years.
Yeah, and therefore the BFSI exposed IT companies, or all of them have BFSI, but just the ones which have a higher share of BFSI, I think that's a set of companies that you clearly want to watch out for. But for today, though, the market will not separate the wheat from the chaff. Almost everything which is tech-focused, if indeed it's a red sweep eventually, will do well, as the markets are showing right now.
Just one more point I want to add before we get to another important segment is, and we've not talked about it, but the geopolitics and the India-US relationship. That's actually at the backdrop of it, that's the most important thing. The kind of relationship Trump and Prime Minister Modi have is a positive for us. Not that there is a negative relationship with Kamala, but it doesn't exist on that plane right now. The Trump-Modi relationship is well known. So that's a positive for us. On the other hand, in terms of defense ties, remember Quad began under Trump, and he would largely be seen as positive for defense ties as well. I mean, there is this big hope that he comes and he stops the conflict in the Middle East, he stops the Ukraine-Russia war, but I mean, that could be more fantasy than anything else. So a space to watch, no doubt. But let's go to another segment which is very, very important, which is auto numbers. And remember, you've had two major companies now say they are going to be looking at retail numbers, not so much as dealership numbers or factory gate numbers. In light of that, what FADA, the Federation of Dealers, has put out becomes very important. They say total vehicle sales grew by over 32%, and most of that came from two-wheelers, which saw a 36% growth. Commercial vehicles, meanwhile, saw a single-digit growth, with three-wheelers coming in at 11%. To put these numbers in perspective, we are joined by C.S. Vigneshwar, President of FADA. Mr. Vigneshwar, great to have you on, and thank you so much for speaking with us today here at NDTV Profit. Let's begin by how you have seen the numbers for the month.
I think the numbers have been excellent across the board, whether it's urban India, rural India. We've also seen the passenger segment, heavy vehicle segment grow well. And this has also resulted in great sales because it was a little bit tepid for a few months before that. The two-wheeler segment, again, has been fantastic. The two-wheeler segment has been going through quite a lot of pain in the last couple of years. But in the last couple of quarters, we've seen the PVs, the two-wheeler segment also grow. So that's fantastic again. Of course, the festive season for us is not yet over. We have the festive season, we calculated from the first day of Navratri to 10 days after Dhanteras, which means that we have another week of festive seasons to happen. Another thing also to consider is sometimes automobile sales, the registrations, all these things happen a little bit later. So there could have been instances where some of these vehicles could have been sold in October itself, but the registration will be happening only in this month. So we can also expect a great November. So that's what our expectations are.
It's great to hear, Mr. Vigneshwar. So October is good. The festive season is not all throughout, and we'll of course see those numbers in November. What has the mood been like? Because the commentary from auto companies has not been very positive. But you're saying on ground, you're seeing good retail sales in this festive period?
The reason why the OEMs tend to differ in this viewpoint is the fact that they've been loading stock for the last 4-5 months on our channels. So I guess their figures have actually come down a bit, but it hasn't come down a lot more because the stock position hasn't changed much. Each time the OEMs talk about reducing of the wholesale, they talk about vis-a-vis last year. But when it comes to stocking, the prudent thing would be to see how they have reduced it over the last quarter or the previous month. Right now, our stock positions still remain a little bit critical. We estimated the previous month of when we started off October, we were at about 80 to 85 days stock. Right now, the range has gone to about 75 to 80. So still it is overstocked. It's a cause of concern. Of course, we are hoping that manufacturers would actually heed our advices and start optimizing stock, because it's getting to dangerous levels where it's going to be unhealthy for the whole industry.
In terms of categories, what has been happening, Mr. Vigneshwar, in the sub 10 lakh rupee four-wheeler or passenger vehicles? Because that seems to be one big problem area.
Yes, I think a few OEMs have also highlighted that, that there's some concern area in the sub 10 lakh category. That is true. We're also
it's on screen right now,
eager.
guys.
Yeah. Sorry? Could you repeat your question, please?
Yes, please go ahead on the sub 10 lakh category, sir.
Yes, so the sub 10 lakh category has been a category of concern because it's a very important category, because that's where the the broadest funnel is in terms of markets, in terms of getting two-wheeler customers into the car segment, and also getting the entry-level car segment customers interested to then moving up. So this is a very important funnel for us. Unfortunately, it has been having some sort of headwinds. A lot of it also is to deal with the economic sentiment which is going around. But I think there are positives because the rural markets are picking up. Hopefully, the rural markets can also carry through the sub 10 lakh segment. And the salaried class also is very important here. So the government probably needs to give some impetus to this particular segment, because it's a very important segment to make sure that these customers who actually join in the 10 lakh segment go on to purchase vehicles for a lifetime. And they keep upgrading the vehicles to a higher category each year. So it's a source of concern, but we are all trying to work together to solve this issue. Great offers are also running on that segment. It's a very competitive segment. So hopefully there would be an improvement there.
What is the current inventory level? Right now, Mr. Vigneshwar, it was about 7.9, nearly 8 lakh vehicles last month.
Yeah. So
what is the current number?
It's about 75 to 80 days. It's still not healthy, although our sales have been great in passenger vehicles for the month of October.
Any absolute number you can give us compared to that 8 lakh? Has it come down?
It has gone to about our calculation. It is, in the range of about 74 to 78 lakhs is what our range is.
74 to 78 lakhs is.
Yes.
Is the
7.4 to 7.8.
Sorry, I just got a little thrown off. So yeah, you're just a mild cut in that inventory. Just one absolute last question, Mr. Vigneshwar. You know, we've had a good festive season. That's par for the course, frankly. What happens after November is the question, because we're trying to get a sense of what's happening with the auto industry in terms of demand. What happens when the first 10 days of November get accounted for?
Tamana, the thing which we are banking on is the fact that for the next couple of months, the wedding season is on, and there are 4.8 million marriages which are supposed to take place in the next couple of months. So I think this wedding season would really help us carry things forward. Apart from that, usually November is a decent enough season, but December is when our sales really kick on to the real high mode. It's probably one of the highest months for the auto industry, because there are great offers running, and also the marriage season also makes people buy the vehicles. So we are counting on these two. And also the great monsoons have also helped the rural market to go to the next level. So with these things in mind, probably we're going to have a good next couple of months too.
Fair enough. Thank you so much, Mr. Vigneshwar, sounding the FADA president there, sounding a positive note as far as auto sales are concerned. With that, it's a wrap on India Market Open, but stay tuned. Talking Point up next.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. It's 10:01 a.m. today, and at this point of time, if you look at the numbers on the US election watch, it's 230 for Donald Trump and 187 for Kamala Harris. So certainly the Reds are winning. What kind of implications does it have? I think that's the key talking point with somebody who probably thinks about this a lot more deeply than many others. Sridhar Sivaram, Investment Director, Inam Holdings, with us. Sridhar, thanks so much for joining in today.
Thanks for inviting me.
And the idea of getting you today was this, because we kind of wanted to talk to you about what the implications of something like this could mean for trade, rates, flows, and a lot more. But just, I mean, is this a surprise to markets, because they seem to be really rejoicing a red victory ever since last night?
Yes, so I think I think the final results, I don't think we are going to get even by end of today. So this is going to go on for maybe till tomorrow.
Agreed.
Till we get something final. But broadly, I think markets generally are more positive with Trump because he's pro-business. And in terms of taxes, his tax policies are a bit more favorable than Harris. And the scare of capital gains taxation on unrealized gains, I mean, those are really small things, but from a market standpoint, it seems like Trump is more favorable than Harris. But if you look at broad policy level, we've seen 4 years of Trump and we've seen 4 years of Biden. They weren't very different. I mean, one would have thought that, a lot of the tariffs which Trump had imposed on China would get reversed. Nothing like that happened. In fact, more tariffs came even during the Biden regime. So I think from a broad policy standpoint, I think they aren't very different, honestly. Yeah. It doesn't make too much of a difference.
And from a India-US relationship as well, a few chinks here and there notwithstanding, the last 4 years of the Democrat power in the US also had some fairly strong outreaches to India on multiple factors. So on that too, would you reckon that both coming out, either coming out is not going to be a negative for India?
Yeah, so I think it comes from the fact that their stance on China is a bit more, I would say, very firm in terms of the tariffs on either side. So then they cannot be antagonizing both India and China. So even though India, I think all the policies of India are also not exactly that US likes, like our relationship with Russia is not something that US is very happy about. But the fact is that they cannot antagonize both India and China. At least that's a broad feel you get.
Right.
So India is in the right place at the right time. So I think it's broadly positive from that standpoint. I mean, the other important data that I recently came across is that the largest exporter to US now is no longer China. It's actually Mexico. It's almost close to 500 billion. And that is happening because Chinese firms have put up their capacity in Mexico to bypass the tariffs.
Yeah.
I think that may get affected if Trump comes. And that's positive for India again. Because they bypass the tariffs and Mexico becomes the hub for manufacturing. It's really not manufacturing, it's assembling. I mean, those are the positives, the second derivative positives that India may get if those tariffs are imposed. So it's complicated, but I think there are a lot of wheels within the wheels.
So a lot of, and I'll come to the easy wheels in a bit, but since you've brought this, I'm just trying to understand, maybe it's early days, but are there thoughts around, and all of this is hypothesis, right? One, it is a hypothesis that it is the Republicans who come back to power. As of now, it is a hypothesis, even though the numbers look in their favor, but this will change, as Sridhar Sivaram said. But working with that hypothesis, that if indeed it is the Republican Party coming to power, have you done some work about potential investing implications of this sectorally? I'll come to the micro first, then I want your view on rates and flows as well. But I'll start with the micro first, since you brought this up as well. Have you done some work, or is it not really worth the time to spend about what could happen and therefore try and take investment bets accordingly?
So I think one sector, if Republicans come, which will get affected, in my view, very badly, is Big Pharma. And this is thanks to all the documents and speeches that RFK Jr. has made, because he's been a big proponent of transparency in Big Pharma, and we haven't had that for many years, and we've seen that during COVID times also. If that happens, and a lot of the easy approvals that Big Pharma has been getting without getting proper safety data, I think that looks, I mean, I don't even have to say, I think if Republicans come, you'll see what happens to Big Pharma, because it's very well documented in the US. So I think that's one, which again may help India, because some of the generics will come into play, because some of these drugs are new drugs which seem to be giving better efficacy than some of the older drugs, but may not have the same safety data. But we'll have to wait how this plays out, but I think that's a sector which gets impacted, but it doesn't affect India that much.
That much. Okay, fair call. The belief, again, just one last micro question. The tech index is rejoicing today, 2.5% up for Indian IT. Now, what gives here? Is it a belief that corporate taxes go down, therefore corporates will spend more, and therefore Indian IT companies do this, or what is it?
Yeah, I think it's in thinking in those lines, but I think it's a bit far-fetched. I think AI is affecting Indian tech more than any of all this. So I think if more AI is implemented, and it's far more easier to do the lower end jobs, because AI can do data analytics much faster than humans. So I think that affects more, but I think it's thinking in those lines that discretionary spending goes up, and that has been one of the issues, that discretionary spending by corporates has gone down. As a result, it has impacted IT spending.
Got it. Okay, now one of the things, and viewers, remember, when you see this show, rather right now on TV it's live, but when you see this show eventually on digital as well, the numbers could have changed materially. So take all of that into account when you're listening into what Sridhar Sivaram is saying and the questions that I'm asking as well. One of the thoughts also, Sridhar, that came out in the last 15-20 days was that a potential Trump victory would be reflationary, would mean that inflation perks up again, because all his policies are kind of pointing towards that, and therefore the rate cut trajectory that was perceived to be in place with lower inflation in the US might get reversed. And some people argue that we might even see higher rates and higher inflation numbers in 2025 in the US. And therefore, would that mean that flows which are perceived to be flowing into emerging markets and India from the US with a lower rate cycle would actually now go back?
So my view is either side is going to be inflationary, because I'm not seeing either policies being fiscally prudent. So if you look at the fiscal policies of either side, you can argue that the Harris side fiscal deficit goes up by a lesser amount and the Trump by a larger amount. Either way, if your deficits are going to balloon, it eventually becomes inflationary. So I'm actually not in the camp that the inflation demon has been conquered. It will come back again if these sort of policies continue. The only flip side from a Trump standpoint, I would say, is that there is a possibility, or there's a belief among experts, that Trump will be far more decisive in getting the wars across the world in check. He'll be able to. I don't know whether it's actually true or not, but possibly the Russia-Ukraine war could get resolved. And today we are seeing some inflation also because of the trade disruptions, because as the war happens in the Middle East, some of the shipping routes are closed, and it takes that much longer and the costs go up. But on an overall basis, I don't think either side is going to help inflation. I mean, I may be on one of the few ones saying this, but that's my view, that inflation is not going away in a hurry.
No, we really love and respect your views, and hence, even if it's a minority view, it's great to get. So my question therefore is, Sridhar, what happens to flows? Because FIs have not had love for India for sure this calendar year. Does it worsen? Do you reckon that flows out of India could worsen if this were to be the case, that it is reflationary, the markets preempt what happens 6 months out, and therefore flows continue to be outwards, the way they happened in October?
Yeah, so this has been my view for a while, that emerging market as an asset class is dying because this asset class hasn't given returns, say 10 years, zero return. If you take even 20 year, it is like 2 or 3%. And only 2 countries have really given any sort of reasonable return in the 7 to 9% range dollar returns, which has been India and Taiwan. So the bulls argue that it is China which has brought down the returns, but when you drill down deeper, everything else is a basket case. So I think this asset class is seeing a lot of redemptions. As a result, maybe newer asset classes will come, which is ex-China or Asia, because just keep in mind that emerging market as an asset class has commodity exporting and commodity importing countries, current account surplus and current account deficit countries. So it has per capita of $25,000 to $2,500. So there's no homogeneity in this asset class. So whatever was done, say 30 years back, it hasn't really given the fruits. So how long will people wait for returns? I think a larger part of the exit, because what I know interacting with some of the larger pension funds is that if an asset class doesn't give returns for more than 10 years, then they start pulling back. Keep in mind that US has given such huge returns. So, and if you're based in the US and you are allocating 5% or 10% to emerging markets, it hasn't given any returns, you go back to your base. So I think that's, to a large extent, I think that's what is happening. In between, you can argue that some flows have gone to China, but I don't think that's the larger part.
If you are a global investor, Sridhar, right now, you have a choice of, whatever the new government is, and the hypothesis as things stand, the numbers as they stand, let's say a Trump-led Republican party in power. There is the NDA power out here, and China, whatever the NPC does will get known in the next couple of days, but China doing what it is doing as well. And if you had if you had $1 to invest across without any restrictions, where would the preferences be?
Obviously US. It's 70% of the benchmark. If I'm a global investor, it's 70% of the benchmark.
Okay, let me simplify it. Between China and India then?
Obviously India.
Obviously India.
Yeah, one, because I'm based here, so I understand India far better. Two, the reflation in China doesn't seem to be going away in a hurry. And they haven't done enough to suggest that they are pro-business. I mean, you keep getting some news flow here and there. It may be a very cheap market, and you always get violent, returns in the market. But I'll just give you one number, that the March 20 low for China, which is HSCI, which is the Hong Kong listed index, was something like 8,000. Ours was maybe 8,500. Today we are at 24,000, and they are still below 8,500. They are at 7,500. So I'm saying they are still not reached the March 20 lows. So obviously this market's got decimated. So obviously you'll get violent, returns in this. Every year you get a 30-40% return, and then it collapses again. So I'm not a bull on China.
Okay, it's becoming very difficult to predict what that market will do per se, policy and return wise is what you're saying.
Yes,
and therefore India.
Exactly.
Okay, is India the recent quarterly numbers seem to suggest that there is a bit of a slowdown underway. Some people argue that the government spending has been subpar, and that picks up and that revives. If not in the OND quarter, then from Jan, Feb, March quarter, the numbers and the GDP starts to look a lot more benign than what it has. What's your thought here?
So I think we've got almost 3 years CAGR of over 20% earnings for the large cap. I think there is a reversion to mean, which is closer to 15%.
Okay.
Which means that you'll get 1 year of subpar results, which could be this year. And we may go back to a trajectory from next year. So anyway, the market needed a pause. If you take the last 1 year return for Nifty, it's up 25% after the correction. Mid caps are up 40%. If you had asked me last year, same time, with 2 wars going on, and if you had told me the Indian election results also, that Modi will not come with full majority, and you would have told, after all this, the markets will be up 25, mid caps will be up 40, I would have said it's a joke. But that's where we are. So I think the market needs a pause, and you can find various reasons for why the markets are correcting. But earnings have to catch up. So I think it's good, whatever is happening. That's my broad view.
Yeah, but will it continue to happen, or do you think a bit of a revival? So I mean, right now it's what, 2.5% earnings cut for the year, as I read a sell side report which came in, I think, yesterday. Post numbers thus far. Do you think there is more correction underway based on the slowdown?
I think financials will see massive earnings downgrade. Not the big banks, but NBFCs, MFIs, small finance banks. I think the next quarter is going to be a disaster.
Okay, you've been vocal on this, and I want to come to that in a bit. But first, the larger universe, Sridhar. Do you believe that there will be a further correction into Indian markets from here based on earnings downgrade?
So it's very difficult to predict market short-term views, because flows can have an impact. You had large FIIs selling, you had very massive FII support. If, say, FIIs turn, then the markets could move up. But eventually, earnings have to catch up. So if you ask me next 6 months view, I think markets will be roughly in the same range. If that helps. I mean, that's my broad view, that earnings have to catch up. There are too many ifs and buts. Earnings are not that great in the short term. Consumption is slowing down. We have some uncertainty here and there. So I think broadly, stock specific, there could be sectors which may do well, some may do badly. But overall, as an index, I think we'll muddle around it at this level for the next 6 months, till the time earnings catches up and we'll start looking at the year ahead.
Okay. Now, smaller financials is the next question. But before that, the question is on large cap banks. Almost every sell side note that I see now is saying that, hey, the discounts are so high. This quarter, a few men have done well, even if the boys may not have, reference to a couple of other banks. But large banks, are they looking like presenting a good opportunity or not really?
With the view that I don't see too much upside in the market, the larger banks seem like a very safe bet right now, because they will be able to weather the storm far better than many of the others. And we've seen that already in this quarter. And we think that that will continue over the next few quarters. They're not guiding for huge growth. So if you look at few of the banks, one of the banks said that they will grow lower than system. The other bank is saying we don't want to grow higher than system. So you're talking of banks which are conservative in an uncertain environment, where regulator is also, doing more than what they normally do, which is, stepping into various areas and asking banks and financial institutions to do X, Y, Z, or asking them not to lend, or many of the other things. So I think in this uncertain environment, I would say the larger banks look far better to me. It's also preservation of capital to some extent.
But you have a choice to sit on cash. You'd rather sit in banks as opposed to cash.
Yeah, so it's not easy always to enter and exit. If I see that I don't see too much of a downside, and it's very difficult to predict when the upside happens, you are better off just staying put with them. If you ask me, is cash better? Possibly in the next 6 months, it's possible, but it's if you ask me personally, I'm invested in large cap banks.
I get it.
I mean, it's easier for me as a person to sit on cash, but I'm still invested in large cap banks because it's very difficult to predict exactly what happens. But it looks safer than many of the others. Let me put it that way.
Yeah, no, and this helps, Sridhar, because a fund manager's view is also based on the mandate that the fund has, and therefore that may be at odds with what a retail investor or an individual investor can do as well. So this really helps. Now, to something that you've been vocal about for the last 12 months. Yeah. I've seen your posts now for maybe 12 or 15 months, I don't quite recollect, which is MFIs. And this quarter, if not the previous ones, but this quarter for sure, in fact, even the previous ones, but this quarter showed that there is an issue out there. How serious is this? What is the investing implication here? Because a lot of people might have some of these investments made at slightly higher prices, and they are kind of licking their wounds currently and hoping for a comeback. You think the comeback is not happening?
I think this is a very serious issue, and I think the worst will be the next 2 quarters. So let me put some numbers to put this in context. So MFI is about 5 lakh crore book, roughly, give and take a few 10,000 crores here and there. From what I understand, speaking to many industry experts, is that 10% of the book is a problem, which is roughly 50,000 crores. And this is the 10% where you have multiple lenders. So when I say multiple lenders, these are over and above 5 lenders to a single lady. And in some cases, it is 10. In fact, I recently met somebody from the financial market who said that of all the applications they're getting for loans, 10% of the applications have 10 or more loans already sitting on their book. And I'm like, what is happening here? I mean, this is so crazy. So why is the guy applying for 11th loan? Because there's a massive evergreening that is happening, which is you're not able to pay one guy, so you're borrowing from the other. And this is something that I've highlighted for a long time, specifically for MFI. And honestly, I didn't know the gravity of the problem at that point, because I was just looking at the external data that if I look at the last 5 years or the 7 years, the customer growth has been 4 or 5%, and the loan growth for MFI is almost 22, 23%. When you see such a data, you know that you're giving more loans to the same lady or the same person. And this, in my view, is evergreening. Industry, says differently. And we are seeing the effect of that now. So the other problem that has happened to the industry is now the industry is pulling back, which is, if you look at the loan book is degrowing. So they are not giving fresh loans, which again causes problem. And what I understand is that RBI has done something which has not been highlighted very well, is that they have banned something called a netting. Now you may ask, what is netting? Even I didn't know till about 15 days back, that if a lady has to pay 10 installments and she's paid 6 or 7, say 30,000 crore loan, and she's paid 20 and 10 is left, the MFI gives a fresh 40,000 crore loan. Out of that takes the 10,000 as repaid. So it's almost like evergreening. Yeah, you're not able to pay the 10. Okay, I'll give you more. So my old loan is repaid, so it is green, so it is perfect. Now a new loan stands, so she has another 6 months to figure out how to repay, which RBI has banned, by the way, from what I understand. All this is going to cause massive issues. So I think the industry has really been irresponsible, is my view. I mean, I wouldn't have used such harsh words, but when I look at the data and a lot of MFIs and small banks have put out data of what percentage of their customers have more than 4 loans, more than 5 loans. It is quite a shocker that how did you even reach this situation? Why would you want to give a 6th and 7th loan to the same person? It's baffling. So I think this next 2 quarters will be very bad, but this has cascading effect because banks are pulling back on lending to NBFCs and MFIs. So they are not going to get funding that easily. So I think we have more pain.
We have more pain indeed. Well, Sridhar is smiling, but I think beneath that smile, you can understand the worry as well that has come out in his words, as he mentioned. Sridhar, take a moment to thank you for joining in today. Really, really appreciate your time and for all the insights.
Thank you very much. Thanks for inviting me.
Now, the pleasure was entirely ours. But as we wrap up this show, it's important to highlight very quickly and get in my research team members to try and talk about what the implications of a potential US election victory would be on specific pockets. So I believe Rucha and Harsh both are with us. Rucha, I'll start off with you maybe, and Harsh is there as well. But IT, because IT is really taking it away today. What is it that you're gleaning from the dealing rooms?
Yeah, so apparently it seems like if Trump comes to power, well, there'll be two positives over here. Number one is the reduced corporate taxes, which might aid margins. But number two is also that on the negative side that, there'll be increased denial of H-1B visa. Because when we look at the history, when Trump was into power, the denial for the H-1B visa had increased substantially to around 24% during that time. So that would be, a negative for the Indian IT company, wherein that will lead to increased visa cost. But another positive over here is, as I mentioned, the reduced corporate taxes, and also now IT companies have started building their own workforce in the US. So their reliance on these H-1B employees have reduced. But moving on to the stock specific action, while the company with the highest exposure to US revenue will likely be beneficial, and amongst the top tier, it is Infosys which will likely benefit because of its around 57% exposure to the US. And also another point that supports Infosys over here is that the discretionary demand revival will benefit Infosys the most because it has the highest share of revenue coming from discretionary spends. From the tier 2 space, well, it is Birlasoft that analysts recommend should be the highest beneficiary over here because it has around 87% of its revenue coming from the US. So companies with highest US revenue likely to benefit in terms of the IT space reviving.
Got it. Okay. Thanks for that, Rucha. Harsh, 60 seconds. What else?
Well, yes, Kamala win will definitely mean renewed vigor, renewed focus on renewables, and therefore you'll have Vari as well as something like a Premier Energies in focus. Also policy stability, right, Neeraj? Also the other piece will be if Trump wins, because that will mean big changes. One is good for the dollar. The dollar will strengthen, good for exports in India as well, and therefore exporters will likely benefit. Something like pretty much all the IT companies, pharma companies will likely benefit from this. Corporate tax rates may go down, which will favor any company having a subsidiary in the US because US corporate rates will come down. Higher tariffs likely to impact apparel and chemical companies. You have insurance companies, or rather the coverage getting diluted, impacting pharma companies.
Noted.
And consumption playing out as well.
Okay, both of you, thanks so much for joining in and giving us that. And that's all the time we have on this edition of Talking Point. Thanks so much for tuning in.
Market veteran Ramesh Damani puts on the cephologist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
Hello and welcome to NDTV Profit. My name is Mihika Barre and we're now joined, I'm going to be speaking to the management of Oil India. We're joined by Dr. Ranjit Rath, who's the chairman and MD of the company, and he's speaking to us all the way from Abu Dhabi, from the Abu Dhabi International Petroleum Exhibition and Conference. Welcome to the show, Mr. Rath.
Thank you very much, Mihika, for having us.
Before I start on talking about the company and India in specific, what kind of conversations have been a standout at the conference today?
The best part that we witnessed in the conference is about not only the oil and gas spectrum, but also the application, and I would say the way we had the inaugural session yesterday. So it was all about digitalization. It was all about enhanced production using digital interventions. And the best part we liked is it's not about artificial intelligence, it's about application of intelligence or applied intelligence. So that's how the whole world, I am sure, the oil and gas sector is playing it out. And in India, we are also working on the similar lines.
Let's now talk about the Q2 numbers. Could you maybe give us an assessment of how the quarter and the first half of FY25 went by in terms of realizations and production?
See, I would say that the first half of the year we have done well in terms of our enhanced production effort. The drilling process is underway. Our drilling efforts has been yielding better results also, and we are looking forward to a much improved results.
And how do you expect volume growth to shape up in FY25? What are the exploration plans and production targets for the next 2 to 3 years?
See, Oil India has been doing fairly well, if I can say so, over the last couple of years, last 2 years specific. You are aware, by virtue of our performance, we have been last year accorded the Maharatna status by Government of India, and there has been no looking back. We have enhanced our exploration acreages, we have enhanced our drilling efforts, we have enhanced our production both in terms of oil, crude oil and natural gas. Last year we witnessed 5.5% and 6% growth in our production efforts. We did all-time highest crude oil and natural gas production. We did all-time highest drilling. We did all-time highest workover. Our EBITDA was also all-time highest. So we have been doing well, and we are continuing to perform or outperform ourselves.
I also want to talk about global crude prices, which have been very volatile of late. How do you look at this in a scenario where windfall taxes are currently nil, and what's your outlook for pricing going forward?
See, windfall tax is basically a special excise duty which is primarily levied when the crude oil price goes beyond $75. Now, currently the prices are below 75 threshold, so the number is nil as we speak. As far as the global volatility of oil price is concerned, we all are aware that while I would not speculate the price points, but knowing well that you are exposed to such volatility, what is in your control is enhanced production. And that's what we have been doing well, so that we sustained our momentum of growth, and enhanced production gives us the volumes. So that's how I would like to negotiate this.
Got it, Mr. Rath. I also wanted to get an update on the IGGL Phase 1 and maybe some insight on how the northeastern demand is now shaping up.
So IGGL is primarily a northeast hydrocarbon Vision 2030 product, where the intent was to create an infrastructure to evacuate the natural gas which we are producing, and there is huge potential as well. Under Phase 1 of IGGL, the pipeline is all under completion, and going forward we assume that by December we should be able to undertake mechanical completion of the pipeline, and it will also connect to all the capitals of the states and the demand centers, and going forward it would also kind of connect to the sources of the gas production areas in the upper part of Assam. So overall it will provide us an integration to the national gas grid and to the consumers pan India. So we are looking forward to IGGL's early completion and future expansion programs from an Oil India point of view. And anyway, we are a stakeholder, both Oil India and NRL, which is a major subsidiary. Together we hold a stake of about 40% in IGGL. Therefore, it will be very, very crucial for us.
Let's also talk about the Numaligarh refinery expansion, like you mentioned it yourself. What's the latest update, and with capacity coming on stream, what kind of benefits does the company expect to get?
See, NRL expansion is underway, as we know. We are expanding from 3 million ton to 9 million ton, that's a 3 times. Plus, as part of the project, we are also having about 1640 kilometers of crude oil line getting connected from Paradip in the east coast to Numaligarh, which will be under completion also. So the target is by December 2025 we should attempt, and we will be able to complete the expansion program, and the efforts are all underway, and we should be able to achieve that target.
Mr. Rath, there have also been some media reports about the potential IPO planning for NRL in 2025. Could you maybe give us some insight on that?
No, I'm not aware of any IPO plan. You let me know when you get to know something more about it.
And then if you had to maybe quantify the gas and crude oil production target, what is the company stating it at?
No, just to share with you, we have done well in our gas production. And last year also we had seen a growth in terms of our gas production. This quarter also we will see gas production. It's like this. The gas production, there is a huge potential with Oil India Limited. The IGGL connectivity will offer us more opportunity, and the DSF blocks that we have both in Rajasthan and in Tripura, we are looking forward to monetize the same. And as we speak, we are talking to additional customers to enhance our gas sales.
I also want to touch upon some Q1 commentary, which did say that lower gas production was due to gas off-takers. Is the company seeing any green shoots from that front?
So, as part of our strategy, we have aced out a growth portfolio of about 4 million metric ton of crude oil production and 5 BCM of natural gas production as part of our portfolio, and several such initiatives are underway, and as we speak we are on the growth path.
And lastly, I wanted to get a sense of what the capex set for FY25 is. How much of this has already been spent, and how will it be further allocated for the rest of the financial year?
See, as part of our capex, we are looking at about 14,000 to 15,000 crore this year, out of which about 6,000 crore would primarily be for the upstream part of the portfolio, which will be seismic, active drilling, production and other interventions in terms of infrastructure development. And the rest of the capex will come from our commitments from NRL's expansion program, and we will be on track as far as the year is concerned.
Well, that's the management of Oil India. Solid numbers. The stock is getting rewarded, trading firm, as we see it. Another company that reported very strong earnings is Mazagon Dock. Sanjeev Singhal, Chairman and Managing Director of Mazagon Dock Shipbuilders, joins in. Hi, Sanjeev. Good morning. Thank you for talking to us. Sanjeev, let's start with a very good morning. Let's start with what's happening on your margins. The second quarter margins have significantly higher than the normalized PBT margins we've seen in the range of 12 to 15%. Now, can you tell us what led to an improvement in margins, and going into the second half of the year, will they come back to normalized 12-15%, or is there a good chance that you'll maintain current margins?
I would like to clarify that as far as the margins are concerned, when you compare to the previous year, last similar quarter previous year, we had created a provision with respect to the 17 Alpha project as certain delays were envisaged. And of course, there has been slight delays also. And approximately 232 crores provision was created last year. So if we set aside that provision, then I believe that our margins for the current year and as well as last year are almost on similar footing. So there has not been much of a change. Going ahead, as far as 24-25 is concerned, the product mix by and large remains similar. We are executing the project 75, which is of 6 numbers. We have delivered 5. The 6th one we are targeting for delivery this year by December end. Similarly, for project 15 Bravo, which is 4 number of destroyers, which we have delivered 3, and the last destroyer we are targeting for by 31st December this year. And project 17 Alpha, which is 4 number of frigates, and the first of the frigates we are targeting for delivery again by December this year. And subsequently, going ahead in 25-26 and 26-27, the balance deliveries for project 17 Alpha. So right now, my project, broadly, my project profile and the product profile remains similar. So we expect that the margins should also continue on similar lines. Although as far as the industry is concerned, as far as our business is concerned, a margin of 12 to 15% is considered to be reasonably healthy. So going ahead, when our project profile and the product mix changes, we are having for T1 ships, which are smaller vessels of Indian Coast Guard, as well as for exports. So the margins should normalize, but going ahead for this year as well as for next year, I believe the margins should remain reasonably healthy.
Mr. Singhal, just want to understand in terms of the current order book and the way things stand, how much of your order book are you expecting to execute for the balance of this financial year, and what about FY26?
I would continue to maintain that over last year we are targeting 12 to 15% growth, and moving ahead in 25-26 also a similar kind of a growth is expected.
Right. Sir, just talking about the revenue that you've guided for, you've indicated that we should, or you are forecasting a 10 to 12% YOY revenue growth for FY25. Could you tell us the key drivers here, and is there any potential risk or upside to this guidance going ahead?
I personally do not see any downside. In case things go favorably well, then maybe the margins could be a bit higher than 15%. The top line can be a bit higher than 15%. Right now, we are envisaging 15% growth.
Sitting on a very healthy order book, it'd be great if you can tell us what the timelines of that order book are. And also, from what we understand, there's an additional potential order of Scorpion submarines and destroyers. And that's a significant one. 34,000 crores is what we think it is. Could you give me a sense of the status of where the discussion stands, and when can we expect an announcement on this front? Because this is as much as your whole current order book.
Yeah, we are also eyeing for this order with respect to additional submarines, which is 3 in numbers. And right now it is at an advanced stage of discussion with the Ministry of Defense and Indian Navy. Keeping our fingers crossed, we also hope and wish that this order should fructify at the earliest, because this gives a very consistency to our order execution. As our Scorpion submarine project will be practically coming to a close by 31st of December, when we deliver the 6th submarine. Although certain portions of the overall project, that is with respect to the V&D spares and guaranteed effects and the corporate liability, they will continue. But the project execution per se would be complete with the 6th delivery. So we are also expecting and hoping that this order for additional submarines gets finalized soon.
Well, just a quick One last question that I want to ask you in terms of the commentary that came out post your results. Can you give us more details about the potential early delivery of the destroyer and what factors have led to this ahead of schedule delivery that comes in?
As far as the destroyer is concerned, out of the 4 destroyers, we have already delivered 3. The first one was delivered as per the timeline in October 21. And second and third destroyers, both have been delivered ahead of the time schedule. As far as the 4th destroyer is concerned, again, we are targeting, in case I am able to deliver it by 31st of December, then this would be approximately 2 months ahead of schedule. Because as far as the contract is concerned, the delivery schedule is February 25. Over the years, we have gained a significant expertise, and if I can provide a perspective, then I would say that prior to this, the destroyer project, that is 15 Alpha, when we delivered the project from launching that is when the vessel first time touches the water, it is launched into the sea. And delivery, the gap between launch to delivery was approximately 100 months. And over the successive deliveries and the 17 Alpha deliveries and 17 Bravo deliveries, 15 Alpha deliveries and 15 Bravo deliveries, the current destroyer, we are expecting that the gap between launch to delivery should be around 32 months. So this is a very, very significant progress migrating.
Sanjeev, right. Sanjeev, also the ONGC project is expected to generate 7,000 to 8,000 crores over the next 2 years. What percentage of this project's execution is anticipated in the current financial year, and how does this fit into your overall revenue guidance?
This has been considered while we are given the guidance with respect to revenues for 24-25 as well as 25-26. This has been taken into consideration. Right now, I expect for the current year, this would be something around 2,000 crores. 1,800 to 2,000 crores should be from ONGC project.
Okay, Mr. Singhal, we'll leave it at that. Thank you so much for joining us and taking us through your views on the quarter gone by, as well as what we can expect on the execution front. But with that, we shift focus to the futures and options space. We have Ajit Mishra of Reddy Broking and Jatin Geria of Sharekhan by BNP Paribas joins us on the show. Good morning to both of you and thanks for joining in. Ajit, I start with you. Your view on the benchmark indices. It does seem like the earlier strength that we saw this morning it seems like now we're looking at a little bit of sideways movement. What's the view here as far as the Nifty 50 is concerned specifically?
Yeah, good morning, Agam. So yes, now we have started seeing bit of a cool off after almost kind of a retest of the strong resistance area, which is around 100 EMA on the daily charts. So it's broadly the range that we have been hovering in on the closing basis, 24,000, 24,500. So we are closer to the upper band, and that's why we are seeing this profit taking. So banking, I feel, Agam, is going to be the main key factor which will decide whether we are going to surpass this level or not. So as of now, we feel that this market, Nifty at least, is going to remain in this range, at least for a time being now. And banking, once we break above 52,600, that would help the index to march further towards let's say 25,800 or maybe higher.
Right. We also have Jatin who joins us. Jatin, what are you feeling? Do you feel like the short covering could extend further and a long trade on the Nifty or Bank Nifty could be warranted even at these levels?
Yeah, good morning, everyone. So as far as our Sharekhan research team view is concerned, we believe that the correction on the downside has finished its initial leg. So the correction which was going on from the 26,277 high, we believe that it has terminated at around the low of around 23,816. And from thereafter, now the Nifty is in the process of retracing that fall. So definitely we are expecting a bout of short covering. Yesterday we saw just a trailer of it. I think over the next couple of weeks we are expecting a sharp up move towards 24,800 and thereafter 25,000. So our view is that the first leg of the correction is over and now we are into a retracement rally. So in terms of trades, I think 24,000 should be kept as a stop loss. And on the upside, we are expecting 24,750 24,800. So that should be a trade on the long side in the case of Nifty.
Jatin, your top trades for today, what are you recommending? IT seems to be the star, but it's cooling off a little bit.
Yeah, that's part and parcel, because after the initial hour of trading session, we get some profit booking. So that's not a worry, because overall the trend seems to have reversed, and hence we are suggesting longs in the IT sector. The initial recommendation on the IT sector would be long in TCS. The stop loss is around 4,000, and on the upside we are expecting levels of 4,300. And the next recommendation on the long side would be a long in Jindal Steel. So metals are in a pullback rally, so metals can be considered for the long trade. Stop loss should be kept at 930, and we are expecting levels of 980 to 1,000 on the upside.
And Ajit, what stocks are you tracking this morning?
So, Agam, IT definitely is one common factor, considering that we have almost recovered to what we've lost last week in the IT heavyweights, and the IT index has also recovered very strongly of late. So we expect this recovery to further strengthen, and Tech Mahindra, which retested its neckline area of the previous consolidation range, and witnessing a strong rebound thereafter. So we expect this recovery to further strengthen as the day progresses, and close to around 1750 is what we are eyeing in TechM. So with stop at 1645, one can go long in Tech Mahindra at current levels. Alongside with that, since the market is still struggling in our range, it's prudent to maintain few shorts also. And Core India, after the distribution pattern breakdown, is basically hovering in a very tight range, while holding around 200 days of exponential moving average. So indication of further drift is more probable, and maybe around 422 is something that it might test in a day or two. So with stop at 442, one can go short in Coal India.
Okay, well, those two ideas from Ajit. And on that note, thanking both our experts, Jatin and Ajit, for joining us and taking us through their views on the markets, and of course, giving us a handful of trading ideas to work with in markets which are actually cooling off in terms of volatility, certainly. But with that, we should focus to yet another segment which is keenly sought out for, and that's the commodity space. We have Dinesh Somani, he's from Pro IntelliTrade Services, who joins us on the show right now. Dinesh, good morning and thanks for joining in. Dinesh, before I come to commodities, with the way the elections are playing out in the US, want your opinion on the US dollar and INR pair. How are you expecting trade to pan out, considering we've already seen a new low for the Indian rupee?
Yeah, good morning. We can see a tough fight between the two parties out there in US election, and if the Donald Trump party wins in, there could be heavy tariffs on the Chinese goods, and that could impact the commodity prices severely. On the other hand, if Kamala Harris goes through, then there could be hardly any change in policy, and things are going to be as it is. Volatility could be high if Trump takes in and takes the lead.
Right.
But Dinesh, based on that, how are you looking at the rupee move with respect to the absolute levels?
Yeah, we've seen dollar index moving up from 103.40 levels to 104.4 levels, almost a 1.5% move since the morning. And we could see that it could move up if it crosses 105.40. We could see the dollar index scaling up to 107 levels. So on the Indian front, USD INR, I expect it should not breach 83.80 levels on the downside, and upside we expect around 84.55 levels.
Dinesh, I believe you've got a sell gold. Can you elaborate on that call? And interestingly, you've got a buy silver. Usually, I thought both those commodities work in tandem.
They do work in tandem, but I mean, if you see the spread between gold and silver, it was 24,000 a month back, and now it is down to 14,500 levels. So the spread has a shrink up, and we expect silver to perform from 93,200 levels to 94,500, 95,500 levels. And on the other hand, we could see that gold prices are taking a resistance around 78,700, 750 levels. That's a crucial resistance. I expect selling and supply to emerge at this level. Downside, I expect prices to take support at 78 200 levels. So it's a sell on rise as far as gold is concerned and buy on dips as far as silver is concerned.
An interesting one. Dinesh, how are you looking at trade when it comes to commodities like crude and natural gas?
Crude oil prices are showing a reversal in trend since the elections are getting over today. I think there could be a shift in trend and prices could take support around 598485 levels. It's a good buying support zone. Upside, I expect around 60806175 levels in a week's time. Downside stop loss should be maintained below 5920 levels. So I think a trend reversal, a shift in trend could happen in crude in the next week.
Right. Dinesh, I believe you're constructive copper. What is the view on the copper trade?
Yeah, actually, the trend has shifted since morning. It almost fell by 2% from the high it made of 861.50 yesterday. It has moved down to 843 levels. A major support is expected around 842 levels, and Friday could move up from this level. Just a pullback rally up to 849, 851 levels. Stop loss to be maintained below 837 levels.
Okay, Dinesh, we leave it at that. Thank you so much for joining us and taking us through your views on those very actively traded commodities. And of course, they're even more pertinent at this point in time, considering we have so much change on the anvil when it comes to the globe. Not only the US elections, but also, several conflicts coming across. And of course, not to forget, we also have the Federal Reserve meeting upcoming, which could potentially change the course of things going in. But yes, that's what we have in terms of the futures and options space and as in the commodity space as well. On that note, it's a wrap on this edition of the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
Hello and welcome. You're watching the Small and Mid Cap Show. The markets are looking good. May have come off the day's high point, but still trading in positive territory. The Nifty up 0.6%, continuing with its short covering led rally that began yesterday. Comfortable about 24,300. The next stop may be 24,400, which is what the bulls will try and attempt at. The breadth of the market started well. It's still looking good, but there could be a small change in terms of where the bias is sitting. We were completely skewed towards the advancing side, but now, of course, that picture looking more or less a 50, slightly more than a 1/3 towards the sell side. Well, the broader markets are looking good as well. The sector of the morning for good reason is IT. With the presidential debate in full swing, full swing in the US, it's Trump or Harris, and it's a close call like we've been saying. And of course, still early days, but the IT sector back home is already rejoicing a Trump victory. Most IT stocks are trading higher. The IT index is in deep positive territory. It's pretty much recovered all its losses from last week, with stocks like Persistent, LTIMindtree, TCS, Infosys, HCL Tech, Coforge deeply in the positive territory. Well, metals are looking okay. They're trying to find their feet. Remember, you had a very strong run on metals yesterday. That now more or less a mixed picture is what we have. Some of your auto counters are seeing some rebound after the big sell of last week. Yesterday wasn't too bad, and today as well, there's follow-up buying that's playing out for the sector. So all in all, it's a stable market. The breadth is okay as well, but of course it is volatile on expected lines, with IT sector being the top winning sector of the morning. If, of course, Trump comes into power, it means a cut in corporate taxation, which means, of course, a bump up in discretionary spending undertaken by corporates. And this has been the one big uncertainty or overhang for the IT sector. With some clarity around the corner, it seems like there could be relief coming in for a whole bunch of these counters in trade. So you've got Persistent that's leading the gains. It did take a break a few minutes ago, but look at the move now. LTIMindtree is up 4%. So that's an interim break has now been resumed in terms of an uptrend, with all your counters trading deeply in positive territory. Well, I believe we've got the management very shortly. You'll be talking to us on Dr. Reddy's. Remember, the pharma major saw a 16% uptick in its revenues, while profits and margins also took a hit. I believe is Mr. V. Ramana on the reasons for margin decline and more. Listen in.
In terms of margins, I would stay pretty healthy, because if you do consider the mix of both the US, Europe on one side, as well as the branded markets of India and emerging markets, I think we are in a pretty healthy space as far as the margins are concerned, Mr. Sadit.
It came at 25.8% versus 29.1%. So there is a small impact which is coming in. Can you give us an idea where is that impact coming in from?
So if you basically look in terms of what we have been telling in terms of the street, is to say that we would be able to work towards delivering an EBITDA of about 25% and an ROC of 25%. In a consistent basis. So as against what we said that we will do, we have done about 28% in terms of EBITDA. So we're pretty much in line with what we said that we will be able to deliver.
Give me a sense of how your product launches have been in Q2. You have guided that you're looking at around 25 product launches in FY25. Can you give us some idea of the launches that happened during the quarter?
So in terms of new product launches, we have new product launches not only in the US, which we have done, we've also been able to launch new products both in India and emerging markets as well. In India, apart from the products that we would have launched otherwise in terms of the generic products, we've also been able to launch products from our Nestle JV, which got operationalized in Q2. And we're also bringing in innovative products as part of the innovation agenda of the India business. At the same time, if we take emerging markets, it's about how do we bring in the products that we're launching in US and Europe into the emerging markets and leverage out of it. And we do see good number of products being launched in emerging markets too. So in terms of new products, I would say that both within the US or the generic markets as well as the branded markets, what I would call it as India and DM, the number of launches are as per our expectations.
And you are on par to meet the 25 product launch for this financial year?
So again, from a point of the new product launches in the US, our guidance is around 20 products. At the same time, we do have a large number of new products that we launch both in terms of India and DM, both in terms of India and DM too. The number of new launches would be very meaningful.
Give me a sense of how the pricing environment is in the North American markets. Are you seeing bottoming out of price erosions there?
So specifically for the last quarter, we've had a single-digit price erosion. And I think that when it comes to price erosion, the way it works is it is normally impacting a few products. Now, whether that impact comes in one quarter or the other, we would not be able to say that this is something that is expected to continue in terms of the future quarters. So we understand that when it comes to the US business, one would have to factor in price decline, but specifically in quarter two, the price decline has been in single digit.
On your Sanofi portfolio that you acquired, give us a sense of how it has done and how it contributed to your top line this quarter.
So Sanofi portfolio is a good set of products. And once we got this portfolio from Sanofi, we have been able to add growth both in terms of how we would be able to take it to a larger set of customers and also how we are able to bring it into the tier 2 and the tier 3 cities as well. The portfolio has grown well, both in quarter 1 and quarter 2, and is contributing meaningfully to the overall growth within Dr. Reddy's in terms of how we see vaccines playing out for us. Our journey in vaccines started off with one vaccine that we acquired from Vocard. And with this strategic partnership that we have with Sanofi, we've become the second largest player.
Can you give us a sense of the incremental revenue that this portfolio contributed in the second quarter?
It has contributed, so the way in which I would say is that the base portfolio has grown double digit, and on top of it, innovative assets and Sanofi's vaccine portfolio has further contributed to the 18% growth that we have in India.
Also, you spoke briefly about the fact that your nutraceutical JV with Nestle, has started operational. Can you give us some more idea of how big is this portfolio going to be, and what kind of opportunity that you see in this portfolio?
Good. So we started off when as a company, it was evident for us that in India, we would need to bring in and offer nutritional supplementation to manage and help the patients manage their disease better and help in the illness to wellness journey. The idea for us was to ensure that we bring in products that are not just clinically differentiated, but also from an organoleptics suitable for the Indian customers. While we were on this journey, we have the good fortune of tying up with Nestle Health Sciences with their strong global portfolio and a lot of innovation that happens in the Nestle labs. idea is for both the companies to come together and offer this portfolio of both Dr. Reddy's and Nestle Health Sciences to the consumers and the patients in India. As of today, we are marketing the products. The JV is marketing the products both from Nestle Health Sciences and Dr. Reddy's. Going forward, we look forward to bring in some of the global innovation and the global brands that Nestle Health Sciences has outside of India for the benefit of the Indian patients.
What kind of potential do you see this market providing Dr. Reddy's actually? And how many products did you launch in this quarter from the Nestle JV?
So about 3 products that we have brought into the market. There are a good number of products in the pipeline that we expect to bring into the Indian market. There are many global brands that Nestle has, but that are not yet today available in India. So the idea is we would look into the relevance of each of these brands and how we can bring in these clinically differentiated products to the Indian consumers.
The market is a little excited about this JV, given the fact that it's in a new category for you. Just want to understand this market a little more better in terms of what is the potential revenue that can come in from this market for you, and what is the addressable market that you're looking at?
So if you take the space of nutrition, there are several players over there, but there is no one with a predominant market share. Given the strength of the Nestle Health Sciences and Dr. Reddy's ability to take the products and take the help of HCPs to support the relevance of these portfolio to various disease areas, we feel excited about what this portfolio can offer, not just to the patients and the consumers, but also to Dr. Reddy's. As we look into the next couple of years, we expect that this portfolio will meaningfully contribute revenues for both Dr. Reddy's as well as Nestle.
There's a significant opportunity that's coming up for CDMO players, especially after the US Biosecure Act, which is there, and you have a subsidiary, Origin Pharmaceutical Services, and you opened a biologics facility in Hyderabad recently. Give us a sense of what kind of opportunity that is going to bring in for you, and if you have an update on how that business is going to scale up.
So we do see traction. The number of inquiries have gone up for the CDMO business, and we're actively looking at doing the business development and reaching out to companies both large and small. The way I look into it is this is a relatively smaller business that we have, and obviously we have opportunities to grow. But within the context of the CDMO, there is opportunities both with regards to small molecule as well as large molecule, and we are committed to see how we could help our partners in this journey.
How much of investment will go into this segment, sir?
If you take the overall investment that we're making in terms of what one would call as innovation on Horizon 2, this is relatively, I would say, a smaller portion of the total investment.
And in the biologics segment where you plan to increase your investment, or you've been investing, how much of the investment has happened, and by when do you see some results coming out of that?
So if you take biosimilar business, we do have a portfolio. As we talk, we have rituximab that is expected to get into both Europe and subsequently into the US. Our partner has got the pegfilgrastim into the market. We have a partner product from Alvotech in the form of denosumab. This should be followed by abatacept, and we have the others in the pipeline. So I think in terms of creating the capacities in order to serve all of the markets, we are pretty much on track. As we get into the next financial year, we should see at least 2 of the products getting launched, and as we get into 27, we should get to see the launch of abatacept.
If you can give us a commentary on the US based business, how it's doing, and especially Revlimid sales, how it's done in the quarter.
So Revlimid, generic Revlimid continues to be meaningful for Dr. Reddy's. When it comes to the base portfolio, there's also been good growth, largely based on the volumes that we see. And as we have said, that our aspiration is to grow the base portfolio in single digits. That is something that we continue to do and continue to look for any inorganic opportunities that might come our way to further supplement our portfolio in the US.
Well, that's the management of Dr. Reddy's talking about the earnings and, of course, the quarter ahead. We have with us Sandeep Garg now, MD of Wellspun Enterprise, to talk to us about how the quarter has been and, of course, what we can expect from them in the second half of the year. Hi, Sandeep. Good morning. Thanks for joining in. Sandeep, let's start with the numbers in the face of it. Net profit has declined 11% despite revenue and EBITDA growing quite sharply. Can you share with us what were the reasons behind this drop in net profit? Was it only impacted due to losses from discontinued operations, or is there more to it?
Thank you, Samina. Thank you for taking me on this call. I think you're right that it is whatever drop you see in the profits is only because of the discontinued operations. However, if I were to look at the H1 in terms of the FY25, the revenue has grown at consolidated level at about 25%. The EBITDA has grown at 20%. So that's what is meaningful. The profit from the discontinued operation is notional because we are holding that JV or that company held for sale purposes once the approvals are in place. So it is notional. It will come back as soon as the our equity is sold on that JV.
So I think fair assumption for us to believe that will be then normalized in the next quarter, or am I getting ahead of myself here?
So, Samina, it may take a couple of quarters for us to sell, but it will come back. So this is just a notional loss at this point in time. Right.
Sandeep, also on the margin front, margins have come in 16 to 17% guidance for this quarter. Is this because impacted by seasonality, elections? You want to just share some thoughts on that?
So, see, the overall guidance for the year is about 16% at the 16 to 17% at the console level. The seasonality plays its own role because in the Q2 there is some drop because the revenues are slightly less. The other thing is that it also depends upon which project is churning the maximum revenue in that quarter because each project has its differentiated EBITDA levels. So it's a complex equation to solve for, but at an overall level, we believe that on a consolidated level, we will be an EBITDA 16 to 17% for the year FY25.
You know, let's talk about the order book and pipeline. The current order book stands close to 15,200 crores and with a target of 70 to 20,000 by the end of FY25. You want to share with me details about what will be the nature of these projects and how will they contribute to the guidance that you're setting out for yourself on the revenue front?
So if we were to look at the order book at this end of September, it is close to at a consolidated level of 15,200 crores. We are L1 on one project of about 1,850 crores. We are also expecting to bid for BOT toll projects on transportation sector. We are also bidding for a few water projects as we speak. The traction is also coming on the order book because we are looking at smart ops, which is the new technology that we offer that should open up a lot of avenues for the order book. So these three things plus the tunneling, because we are very focused that on the tunneling, which the strength comes from Wellspun, Michigan, that we believe that these orders guidance of 17,000 to 20,000 crores is achievable.
You know, your order pipeline is also very healthy at 50,000 crores in the medium term. Now, in the second half of the year and maybe FY26 as well, what percentage of this pipeline do you expect to convert into actual orders?
So as you can see from my guidance that we believe that we'll be closing at about 17,000 to 20,000 crores. So, and the consolidated income guidance is somewhere around 4,000 crores for FY25. So we expect that in the period to come, we would be adding something like about 4,000 to 7,000 crores of order, depending upon how the government takes decisions. So that's what my guidance would be, that anything between 4,000 to 7,000 crores will be targeting the orders going forward in the next 6 months.
So that would be the second half of this financial year. Okay, that's good to know. So it's about 10%, over 10% of their order pipeline should be converted into actuals. Water segment constitutes 63% of your current order book. You want to tell me what sort of projects are driving this growth, and what does that do to your margins in that sense? Is this part of the orders healthier margins than, of course, say tunneling in that sense? Or roads?
So I think definitely the water is more healthier margins than the roads. Tunneling is better at the EBITDA level for sure, because that's much niche area, and that's something which contributes better than any other business that we are looking. And the smart ops, which is the another element that we are adding, should give a much better EBITDA as compared to any other thing. So I think in terms of our focus, is to move into niche areas which give healthier returns than what a simple road would give. So we are not getting into road in a simple road business. We want to be in the BOT, which we believe that will give differentiated value. So this is what our strategic calls are, that we want to be in tunneling and transportation as well as in utility. We want to be in water treatment and water segment and transmission. And we want to be clearly in a one-stop shop for all the water needs, whether it is domestic, it is industrial, or it is municipal. So that's the kind of positioning that we are creating for ourselves. We believe with our association with the world leaders like Veolia and Xylem, and our association with Smart Ops, we should be able to offer solutions to every need on water segment.
Sandeep, you're retaining your revenue guidance of 20 to 22% for FY26, FY27, and also is there a good chance, because everything seems to be working for the company right now. Of course, there are elections, there could be some delays, but those are transitional in nature. Do you think there's a good possibility that you may over-deliver on the revenue guidance?
So I would stick with my guidance. It is better to, exceed rather than disappoint. So I would stick with the guidance rather than making any other statement.
Well, also I think we've highlighted most of the aspects of the business. But what I also want to quickly get a check on you, of course, you maintained your guidance on the revenue front, and I think I'm just going to need a little bit more. 16-17% on margins out of the FY25 going into FY26-27, then could there be an improvement on the margin picture, you think?
So we will look at it for sure. If the new segment of Smart Ops and tunneling really kick off, there will be a better margins. But I would, for this moment, retain the 16-17% guidance because I think let's get the orders in, and then we can actually talk about better improvement on the margins going forward.
Investments in the oil and gas sector, how significant is this sector for Wellspun Enterprises' growth? Are there any new developments or projects in the space that you'd like to tell us about?
So oil and gas is being it's a legacy vertical for the Wellspun Enterprises, and we believe that all our assets now are what we are looking at are commercially, economically viable. That's what the finds have, the exploration has has demonstrated to us. So we believe that it's a matter of time when once the regulator approves our proposal of the field development plan, that we would be in a position to really announce that how this whole oil and gas piece is going to land in next few years. The clarity should come in our next 6 months or so. So it is important because we have invested some money, but it is not hugely, moving the needle at that level, at the current level that we are in our operations.
You know, you mentioned to me in our conversation as well that you are evaluating road projects from select state and local agencies. You want to shed some light on this and tell us what are the, how do you identify which and what you're evaluating? Is it because there are better margins? Is this because there's better delivery, or just simply put, better foothold in those states?
So three things that we do when we are identifying a project is, number one, the first thing is that can we effectively deliver that project? So that's something, do we have the ability to, because these are longitudinal projects, do we have the ability to manage the complexity of a longitudinal project in that state? Or do we have a construction partner who can manage it? Second thing that we do is it going to be highly competitive? Because we don't play in a very highly competitive environment. Number three is it going to meet our profit line expectations that we have? So on these three criteria, we have a three-gated process for a bid, and a very clear guidelines as to what we will bid and what we will not bid. So this gives us the ability to target the projects which we have a reasonable probability of winning, and we have a reasonable probability of hitting our profit margins expectation as well.
Well, thank you very much, Sandeep. Good luck. Congratulations. It's been a good quarter. Hopefully the next half of the year as well plays out as planned. With that, we are out of time on the small and mid-cap show. Thanks for watching. That was the management of Wellspun highlighting for us the key, of course, standouts this quarter. They do believe that they will maintain the guidance and deliver on the 20 to 22% growth on revenue, and of course the 16 to 17% margin range for the next quarter as well. With that, completely out of time. Thank you for watching.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
if you want to be in the money.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Rucha Somaya, and we'll take you through the next half an hour of trade. I say half an hour, and I know that some of you will know that we've been doing this show for now 1 hour, but today everybody's attention understandably is to the west of India. It is towards the US, where counting is underway to decide who will take charge of the White House. Will it be Donald Trump? Will it be Kamala Harris? The trends seemingly are indicating that Donald Trump is just about edging it at this point, and edging it comfortably at that. It was initially looking like, based on the exit polls, that Kamala Harris would be in the lead, but that isn't panning out. In fact, in most situations, in some of those very hotly contested swing states as well, Donald Trump is in the lead. And if things go as they are going right now, seemingly, Donald Trump will comfortably take charge as the next president of the United States, the 47th president of the United States. Let's take a look at how the equity markets are faring, because of this major event globally, there's really not too much of the domestic cues that you would be talking about, but clearly you have a continuation of yesterday's buying that carries through in trade today as well. You have the benchmark index that's trading with gains of about 0.7% or so. The broader markets are looking even more sanguine, gains of over 1% for the mid-cap index and about 1.1% or thereabouts for the small cap index. But really the story is about IT today, because if there's one pack that's reacting to a potential win by Donald Trump, it is the IT pack, 3.3% higher, because I won't go into the details because Rucha here is going to tell you about some of that. The dollar is expected to strengthen if Donald Trump comes into power, and that is positive for exporters, therefore it's positive for IT. But it's not as cut and dry as that, right, Rucha?
You're right. So if Trump, which likely seems to be the case where if Trump comes to power, well, this could likely be positive for Indian IT because number one, US dollar is expected to strengthen, and this will imply higher revenue for IT companies in rupee terms. Another positive over here is that the Trump had called out for reduced corporate taxes. Again, this would aid margins. But one problem over here is what analysts say is that visa costs could go up because, you know, the H-1B visa approvals, the rate of those approvals had gone down immensely. Well, the denial rate had gone up by 24% when Trump was into power last time. So this could be a major headwind for Indian IT companies. But one thing over here to note here is that major IT companies like Infosys, TCS, etc. has now reduced their reliance on H-1B employees and started hiring locally in the US. So not likely much of an impact is what analysts believe over here. In terms of stock specific action, well, analysts say that Infosys within the tier 1 space will likely benefit because it has around 57% of its revenue coming from the US and also it has major part of its revenue coming from discretionary spends. So likely revival in the discretionary spending space would help Infosys the most. Lastly, in the tier 2 space, well, Birlasoft expected to benefit the most because it has around 87% of its revenue coming from the US. So though a little bit of inflation inflationary environment is what people expect, but in the long term, Nifty IT or even the Indian IT space is expected to benefit the most.
Certainly, and we'll get into some more details. Of course, we have special programming at 12 o'clock to talk about how things stand at the midpoint of our session. And of course, there's still quite a while to call the victory, but the initial trends will be clearer in another half an hour or so. At least we think so. And we'll get you a sense of what it means, the US election, for you, an Indian investor, and for Indian stocks as well. But let me introduce our experts for the day. We've got Saurabh Jain, who is Equity Head Research at SMC Global Securities, and Vaishali Parekh, the Vice President, Technical Research at Prabhudas Leela. Thank you so much to the both of you for taking the time. Always a pleasure having you on the program. Saurabh, I'll come to you first. On the IT pack, it's clearly buzzing on account of the expectation at this juncture that a Trump presidency could come to pass. What do you make of that? And is it indeed as positive as some people think it is?
Hi, good morning. Thank you for having me on the show. See, I don't think so. The way the market is taking IT up today, I don't think so that positive outcome can come because they have a protectionist policy. I mean, the Trump may force domestic companies to reduce outsourcing, which in turn can lower the demand for the Indian ITs for the outsourcing. And above all, I think the inflationary environment will prevail over there and the stronger dollar will be there. So I don't think so things will be that easy in the Trump's presidency. And I think the clouds will get clear in a month or two after Trump becomes president and what kind of policies he initiates.
That's a fair point. All right. So, but if you were to be asked at this point, and a very quick answer to this, Saurabh, and then we'll jump straight into the questions. If you were to be asked to make a bet on an IT company or a couple of IT companies right now, assuming that we're still a while away from a full recovery in earnings, what would those stocks be?
I think in the large cap pack, I would prefer HCL Technology. Given the results outcome and the management confidence, they have also revised their guidance upwards, and the market also taken cognizance of the same. The valuation gap have also reduced. So I think HCL Tech would be the first company I would bet upon.
Okay, all right. So on that note, it's time to start the queries, and you see that number on your screen right now. That is where you can send your questions to us. And in fact, we've got several questions that have already come through. By the way, if you're tuning in for the first time, you should tell us your name as well as the stock that you'd like to know about. And in fact, the first question that has come through is coming from Sangeeta, and she's asking about Titan Intech. So I'm not sure if you have, because I thought she was talking about Titan Limited, but she's clarified saying that she's talking about Titan Intech. The stock is currently trading at 43.65 and she's acquired at more or less that same price. Saurabh, if you have a view on this stock, do you have a fundamental coverage first of all, and would you say she should hold on?
No, Alex, we don't have coverage.
Okay. Vaishali, any chance that you can tell us what you see on the charts, if there's anything that stands out to you?
Yeah, very good morning. So first of all, technically speaking, the stock is corrected right from 73, and just in August, it had made a low of 29.30. From there on, we are seeing a good consolidation. The stock has bounced back, and we are seeing a good consolidation, and it's attempting to move higher. So I would say a near-term support lies at 39, and we may see a resistance at 50. So this could be taken as a trading strategy right now. Unless and until the stock moves above 50 and sustains, I think the next target that we would be looking at would be at around 60 and higher. So this is how one can make a strategy and follow the levels.
Thank you so much for that. Well, next question is coming from Govind actually, and he's from Dubai, asking about Patel Engineering. Well, he's asking from a long-term perspective, say 3 to 4 years, and he's bought the stock at 60.8 and of 500 quantity. Saurabh, any thoughts on this one?
I think this space is looking quite interesting to me. I think the infrastructure activity will take pace in the second half of the year, considering the fact that the government was not spending that much money because of the election and all. I think Patel Engineering is a good company, and I feel that in the next 2-3 quarters, I think operational metrics will improve, and so the stock price. So I suggest a hold.
DMart is a counter that we're talking about next, and it's not a fundamental question. It's a technical question from Arun. He's writing from Hyderabad. He's bought already at a price of 4,838. So slightly elevated prices. Let's pull up the slightly longer term charts to see around when he bought this. The question is whether he should sell at this point or hold on with the hope or the expectation that he can recover his price and maybe even make a profit. Vaishali, how does it look on the charts?
So Avenue Supermart, I think it's totally oversold. And even on a weekly chart, actually, that is nothing. Only thing that one can look at is on a weekly chart also, it has come on a 200 period moving average. So I would say expect a bounce, but I don't think there will be a good run up. Maybe a bounce up to 4,500, and that's where you can have a relook.
Right. Thanks for that. Another question coming in from Srinivasan. Well, he is looking at a 15% per annum return largely on a long-term basis and asking about a view on IT, especially on HCL Technologies, which he bought a few years ago at 550 rupees, and Infosys as well, which he bought at 700 many years ago. Both the stocks currently trading at 1800 levels. Your view on this one, Saurabh?
I think from the 2-3 years kind of perspective, both stocks look good to me. Most of the capital spending on the AI, the Indian companies have already done, and they are training their workforce to work on this segment. The things are likely to improve in the US markets, and I think they have, in terms of revenue and the growth at the bottom line, the worst is over as it looks now. So, from my point of view, I think both the stocks are still good.
Okay, and we did, in fact, talk about IT in quite a bit of detail at the start of the program. In fact, Rucha did take you through some of the factors that could affect the stocks going forward as well. Manoj from Bengaluru is asking about Bajaj Housing Finance, and since it's a relatively new listing, I'll come back to you, Saurabh, on this one. Bought at levels of 159, can it be held for the long term? If I remember correctly, 20+% growth in the loan book, and asset quality still looked strong. So several metrics looked strong for the company. The question only is about valuations, and are you comfortable with that?
I think valuations are on the higher side only, and because this company has come from a group which has shown a lot of, they have high standards, and this company has always grown above the industry average, and that is why the higher valuation has been placed on this stock. So from the long-term perspective, I think the stocks looks promising, and the valuations will remain higher only. And if it gets corrected, then it can be bought more in a staggered manner.
Right. Okay, next question is coming from Rajesh from Andhra Pradesh. Well, he has bought Delta Corp stock at 272.5 rupees. The stock currently is trading below his purchase price at around 119 rupees. So is there a good time to hold, sell or buy in dips? This one to you, Vaishali.
I would say, well, I don't really, because seeing the long-term chart also, weekly chart or a monthly chart, I don't see any strength in this counter. So I would say it would be better to shift.
What would you shift to, Vaishali, at this juncture?
So I would say, well, a lot of IT stocks are well placed. A lot of, in fact, even banking stocks are well placed. I would rather go for the frontline stocks, perhaps an HDFC Bank. Why not?
HDFC Bank, all right. So HDFC Bank from the banking pack. Let's pull up MGL, Mahanagar Gas, for the next counter. And if I remember correctly, on the fundamentals, these stocks have been under a tad bit of pressure, and that's evident particularly over the last month and a half to 2 months or so. There's been a considerable amount of pressure on the stock prices. The stock is down, in fact, about 20%. But the question is on the charts. Karthikeyan, who's writing in from Kerala, is asking this next question. On the basis of how it's moved on the charts, Vaishali, do you think that it can be picked up at this juncture? He says he's holding, but he has not told me what level he's holding at. Could you reduce your holding at this point?
So I would say, well, the correction has taken substantially in this. We can expect a bounce. The long-term trend line is also broken. So the view only gets positive above 1550, 1600 levels. So I would say wait for it to bounce back till 1600. And from there on, we have a relook whether is it sustaining above or we are seeing profit booking. So I would say that is the level that we can watch for.
Right, thanks. Next question is coming from Ishant Arora. Well, he's asking this one on CDSL. He's bought 300 quantity at 1506 rupees. So any views on this one, Vaishali?
I would say continue holding because all these stocks have been doing well and should continue to do well. So I would look at a target of 1650 to start with. And I think if it sustains, then higher targets of 1800, 2000 cannot be ruled out. But for near term, 1650 is quite a probable target book if it's a trading strategy.
Saurabh, sorry to keep you waiting. Coming to you now on the next one. NMDC bought at a level of 234. This is a question from Murthy, who's writing in from Hyderabad. He's looking at holding this for the long term and he's wondering what target he can place on this.
I think taking a call on the commodities is actually tougher given how the global variables are moving. But yes, the way the China is making progress on the stimulus side, it looks that the commodities will shine going forward. So in that sense, I will suggest a hold on to it.
Right. Okay. Thanks for this one. Well, the next question is coming on Kalyan Jewellers. Well, he's holding this one at IPO price and making good profits now. So do you suggest that this is a good time to book profits or continue holding this one? Saurabh, to you.
I think valuations are asking, and what I have learned from the market is that the sales during this festival were languishing because of the higher gold prices, and the stock got re-rated handsomely. So I would suggest booking some profits off the table.
Okay. All right. I just want to tell you, if you're tuning in for the first time, we generally take one question per viewer because there are so many questions. I know I took 20 seconds to tell you that, but then I had to tell you. Zomato is the stock that we're talking about next. And this is a question from Rajmohan, who's writing in from Ooty. He's got 1,000 plus that he's acquired at an attractive price of 53. So he's really been able to ride the rally, Vaishali. On the technicals, though, would you hold on to this?
I would think so because there's nearly, the trend has been intact and we are just seeing a consolidation. So since the buy price is so low, I would suggest keep a stop loss of 235 and continue holding because today's candle also what we are seeing is it's getting into a new round of momentum. And once we see a decisive move about 270, I think the stock can do around 300 plus. So I would say continue holding, but as a rule, trailing stop loss is a must. So 235 would be the stop loss.
Right. Thanks for that. Next question is coming from Subramaniam from Visakhapatnam. Well, he's bought 30,000 quantity at 270 rupees for Geofinance. So he's asking whether he should sell or hold. Saurabh, your views on Geofinance?
I think one has to be, one has to take a constructive view on the Geofinance, considering the fact that the company is from the Reliance Group and the company has management has got a very bigger plan. So I think that will materialize for surely. So have a view for 3 to 5 years and surely you're going to make money.
Okay, but just to follow up on that, you have to have some sense of what they're going to be doing because they've listed a while back, Saurabh, but have you been looking at specific things that they've been doing on the business side? When do you actually see things moving on the ground?
I think things will start moving on the ground gradually, but on the back end, in their presentation, they have written a lot. I think on the finance part and the segment at which they will be targeting all the business and the SMEs and all. So I think from that perspective, when things will start moving, they will move in a big way.
Point. I want to come back to you on this next one because from the same stable, you have Titan and you have Trent that in the jewelry space have different stories that are playing out. On the one hand, you had Titan, which saw its EBITDA margins contract because of the jewelry segment and studded proving to be a bit of a Achilles heel, if you can call it that. And Trent really is getting into the lab-grown diamond space, and what a story it's been in terms of the fundamentals for Trent. So the question is on Trent specifically, whether it can be bought at this current level. If not, at what level would you buy, Saurabh, on the fundamentals? This is a question coming from Jay Krishnan, who's writing from Kozhikode.
I think the valuations look quite stretched. I mean, the growth that the company is seeing phenomenal. The Zudio launched by the company and its success, and the more of such stores coming in the next few quarters will be really good for the company. But at the same time, I think there is very much left on the table in terms of pricing of the share. So I would say that if someone is holding it onto it, someone holding trend, then he can hold. But from the fresh buyer perspective, I won't recommend.
Right. Okay. The next question is coming from Amresh from Bangalore. Well, he's asking about Adani Total Gas. He's bought 50 quantity at 871. Well, the share price is trending below his buying price. So your views on this one, Vaishali?
So Adani Total Gas, well, we are seeing a continuous drop, but it is making an attempt to bounce back. So I think the way the stock is moving, continue holding. This can go towards 850 to 900.
Okay, all right. The next question we're taking is on Minda Corp, I believe. And what is the target price that you would give for this current year? This is a question coming in from Manoj Padmakar Chavan, who's writing in from Pune. Vaishali, on the charts, how does it look?
So the trend is very good. In fact, it has shown some bit of profit booking. And currently what we saw in this recent corrective move, it has taken support at 200-day moving average. So I would say that, well, if the horizon is for 1 year, look for a target of 650 from here on.
Right. Okay. The next question is now coming in from Arvind. Well, he's asking about Fin Organic and your view on it. Whether one should Fine Organic. Okay, my pardon. One should buy, get into it, or stay away from this one. To you.
Which one are you?
To you, Vaishali. Sorry.
Yeah. So Fine Organic, I think the trend is improving. Overall, we are seeing that chemical sectors is showing signs of improvement. So I would say, yes, the stock looks positive, but further confirmation and conviction comes about 5,200. If that is so, we would look at a next target of 5,500 and so on.
Okay, all right. Varun from Tamil Nadu is asking about NIACL. Do you have coverage, Saurabh? If so, would you buy or hold at this point?
See, on the insurance sector, we have a constructive view. The valuations are, are on the lower side, so there is a comfort in terms of a value stock. So I would suggest a hold.
Right. Okay. Next question is coming in from Pravin from Hyderabad. He's asking about Jupiter Wagons. Well, he's holding this one at a price of 572 and 150 stocks in terms of quantity. So he's asking whether he should sell, hold, any kind of stop loss that one should be looking at. To you, Saurabh.
Sorry, we don't have that much.
Vaishali, over to you.
I would say, well, for long-term perspective, Jupiter Wagon looks to be quite a good chart. And at these levels, you can perhaps even add more because it's just taken a good consolidation and a support at around 480 levels. And from here on, we are seeing that there is some revival happening. So I would say add more at these levels.
All right. Abhay Shah from Ahmedabad is writing about PG Electroplast. He's bought at a price of 250 and he's looking to hold for the next 5 years. In fact, he's wondering whether to add more at this juncture. Saurabh, on the fundamentals, any view?
See, valuations are quite expensive. From the 5 years perspective, definitely it's a hold. You can buy if there is a good amount of correction if you find in the market.
Right. Okay. Okay. Next question is on JK Paper. Well, someone here actually not mentioned his name, asking about JK Paper, whether one should hold this one for long term or the medium term. Any view on this one, Vaishali?
So JK Paper, I think, there's nothing much happening right now. In fact, the chartically, it looks weak. Only thing, if he's holding, I think keep a stop loss of 430 because if the stock closes below that, it's heading for a further corrective move. So hold maybe around, if the stock gives a bounce back, it can go towards 550 and from there on, it can show improvement. So for now, keep a stop loss of 430.
Reliance Infra, let's pull up that stock. In fact, we've had a few of the experts on this program talk about this counter and say that they're positive. We've got Abhishek from Mumbai who's bought at a price of 298, which is very close to where the market price is currently. The stock has done reasonably well, Vaishali, over the course of the year, up 40%. Would you hold on to this?
I would say so, because it's gradually showing signs of improvement. It's still technically, if you say, it's making higher bottom. So right now, as like all the mid-cap stocks have corrected, so has this stock. So I think the stock is ready for a new round of momentum. Keep a stop loss of 250, and this can go towards 350 and higher.
Right. Okay. Next one is from Akash Maheshwari from Ahmedabad. Well, he's asking your view on ONGC. Well, he's bought 914 quantity at a price of 266 rupees. Saurabh, any fundamental thing to look out for in ONGC?
I think the way the crude prices have corrected, I think it is a negative for the company. And after the amalgamation, on the downstream side also, the company is finding difficult to maintain the GRMs and the marketing margins. So in that sense, it's a negative. My view is negative.
All right. Saurabh, on that note, thank you so much for joining in. Vaishali as well, thank you so much for taking the time. Always a pleasure, as I said at the start of the program, having you on the show. And thanks so much for the answers that you've given. That brings us to the end of this particular edition of Ask Profit. As we close, I'd like to tell you that just up next is a special program that will tell you about the latest with regard to the US elections, where things stand right now, what the tally is at. And in fact, as we're closing, of course, it's closer than it has been in the past hour or so even, but still, Donald Trump looking like he's got the fast track heading into the White House as things stand right now. We'll talk about that and the implications for India in just a short while. From Rucha and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani exclusively on the NDTV network.
Hi, thanks so much for joining in. You're watching this special coverage of the US presidential elections on NDTV Profit, and my name is Alex Matthew. Counting is underway to decide who takes charge of the White House for the next 4 years. Now, heading into the election, the two candidates presented stark versions of how they would handle key issues, including the economy as well as overseas relations. Neither presented very clear plans on how they would achieve the promises that they made, but the stances that they took were quite divergent. And while the exit polls had predicted that Kamala Harris would edge Donald Trump in this hotly contested election, the reality is turning out to be very, very different. Take a look at the snapshot of the current voting trends, and a large number of states were expected to vote along party lines, and that's how it's panned out. The tally, as things stand at 12 o'clock local time in India, is 247 to 214. 270, remember, is the midpoint, and that is what you need to win the election for the President of the United States. Now, let's talk about how things have panned out, because if we can pull up the map of the election at some point over the course of this half hour, hopefully we'll be able to give you a snapshot of the map of the United States. And usually what happens is that voters in the United States vote along party lines. For example, Florida on the East Coast, at the bottom of the United States of America, on the East Coast, votes usually in favor of Republican. On the other coast, you have California, which has as many as 40 electoral votes. That state generally votes Democrat, and that's exactly what has panned out. But heading into the election, the crucial battles were set to be in the so-called swing states, where votes could go either way. And right till the last day, yesterday, the two presidential candidates were campaigning heavily, trying to influence voters in those regions. What are they? I'm going to name them: Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. And as things stand right now, you've already had a result that has been called in North Carolina in favor of Donald Trump, and in several of the key swing states, Pennsylvania, Michigan, as well as Georgia, even in Arizona and Wisconsin, you have Donald Trump that is leading the charge. And it could well be the deciding factor that pushes him into the White House. Now, joining me to talk about the current status quo and how things are likely to pan out based on the trends that are emerging, I've got Nirav Sheth, who's the Chief Executive Officer of Institutional Equities at MK Global Financial, as well as Ajay Bagga, who's market veteran and has watched several elections. Both of you have watched so many elections, and you've also studied what the possible implications would be for India. Nirav, will come to you first. we've already seen some sort of a reaction to the initial trends coming from the United States in the Indian equity markets, the IT pack as a whole running up. Not sure whether or not they're reading this as positive in terms of a Trump victory. What do you think is panning out in the United States? Which way do you think that the winds are blowing, first of all?
Two things. First of all, I think we have to assume, and it's very clear that Trump is pro-equity simply because of the fact that, he propagates tax cuts and stuff like that. So when we talk about equity markets in general, Trump coming back to power should be seen as a risk on trade. Now, you have to keep in perspective that we had a serious correction going into the presidential polls, and that was largely because of the fact that you had almost a 4% rally in DXY, which means that when dollar becomes stronger, and largely on the back of both a stronger economy, but also because of the fact that Trump is coming back to power, emerging markets usually be on the flip side of the trade, which means that you had close to about $12 billion of pullback in FI money. Sitting from where you are, the logical trade for the next near term and the medium term would be some sort of pullback in equities. This is the first level of reaction. Then obviously you will get into details in terms of what are the policies Trump is going to follow and so on and so forth. And this is not, it is not very, very easy to templatize this. It's going to be a bit difficult, especially around tariffs and what does it does to bond yields and what it does to dollar. We'll see as we move forward.
Absolutely, Nirav. I have a few follow-ups to that, but I want to get Ajay's view as well on how he's reading the signs right now. Some people are already calling it. Ajay, would you do so? Or would you wait till the final vote is counted?
Because the 7 swing votes, swing states will have very low difference in votes. So I think Georgia and North Carolina, because there are not enough votes for Kamala Harris to now catch up, those have been called. Pennsylvania has just been called. And if that is through, then he's at 267. And more or less he's through to 270 then. So overall, very high probability that Trump is the next US president, Alex, as of now.
Okay, so I'm going to come back to you on that one. There has been quite a bit of talk in the run-up, the Trump trade in the US. There are certain stocks that have rallied here in India as well. Is it that cut and dry? Because in the run-up to the election, both of these presidential candidates have, in broad brush strokes, talked about what they want to do, but there are no specifics. One would assume that Trump is going to be more protectionist. He's going to have more tariffs. He has had in the past. He's going to be hard on China, which he has done in the past. So would you be able to take some of those things and gauge what could come about, or would you be a little more cautious as you head into trade, perhaps in the next couple of days?
That's for me, Alex?
Yes, for you.
Yeah. So, one thing is by today, I'm expecting that in the next few hours, Trump will give his acceptance speech because it's looking very clear now. And hopefully, as he crosses 270, Harris will also concede. So it takes out a big uncertainty from the market. So Indian markets, we have been hit quite badly over the last 4 weeks and with FI outflows. Now, does it change the ground reality? No. The dollar is strengthening today. We have seen Mexican peso going down 3%, yuan down 1.2%, euro down, yen down, the Hong Kong market going down. So that anti-China is showing up in all the Trump trades. Crypto is going up because he's talking about less regulation. He will defund the regulators. So the US market will see a lot of frothiness continuing with this Trump trade. Cryptos are doing well. Dollar strengthening is negative EM flows, and then it will be negative for the Indian FI inflows as well in the short term. Now, that is the rhetoric. What happens when Jan 20th he actually takes over? China, I think there's a consensus across Democrats and Republicans. Trump is more, you can say, of an outlier with his 60% tariff talk. But that is also a negotiation tool to make China open the rest of its market so they can balance their trade balance. Otherwise, US is not going back to making furniture or making computers again. All the stuff that China is doing or the rest of the world is supplying to the US, despite all the talk of moving manufacturing, the high-end manufacturing, the value-added manufacturing, they would like to bring back into the US. But the commoditized manufacturing is not going to be back in the US. So we have to see it more as a negotiation tool by Trump. For India specifics, we have to see, I would say overall it's more positive than a Democrat Harris coming in for the Indian markets. Flows will continue to be constrained with the strong dollar. Most of the market went in long dollar and long US markets going into the the elections. Trump trade was the consensus trade and it has worked out. The Fed rate cuts, Alex, also get little postponed and little slower because inflation will catch up. The Trump impact has been calculated by non-partisan bodies as about $7.8 trillion over the next 10 years, while Harris was $4 trillion. So there is a big $1 trillion tax cut which was expiring end of 2025. That will get rolled over because Trump plus a Republican majority in the Senate will allow him to pass these tax cuts. So Trump tax cuts are on the corporation.
That's a fair point. That's a fair point. And the important point that you just made also is what's happening in the Senate. Nirav, I'm coming back to you. A point that Ajay just mentioned is on the flows, and 1.3 plus lakh crore of outflows on a net basis from the equity markets in this run of 27 consecutive sessions. And this is unprecedented, right? But one would assume that part of that is also on account of the uncertainty before this election result. It's more or less moving towards certainty. Given that we're looking at a high probability of a Trump presidency, and we're looking at a stronger dollar, we're looking at higher inflation, and therefore one would assume relatively higher yields. How do you think those flows will pan out towards the end of this year and heading into next year?
See, I am very constructive on the FI flows. As a matter of fact, eventually there are two things to it, right? You're also looking at the prospect of a growth differential, and then you look at the prospect of currency depreciation. You also have to keep in mind that, what Trump is essentially trying to do. I mean, if you talk about his stated policy directive, he's been talking about the fact that we'll have 20% tariff on everything that's imported into the country and 60% on China. What it essentially means is that you're just taking a price level and resetting at a higher level. In terms of competitive dynamic, nothing changes. As a matter of fact, India simply gets better because then the differential between China and India will go to an extent about 40%. That is number one. Secondly, but the stated policy objective of Trump is also that he wants a weaker dollar, right? So, and we also have to keep in mind that all the currency moves, all the bond yield moves are in effect, self-limiting. The yields go up, it sort of catches on and starts curbing the growth. Likewise, when you got a stronger dollar, that is disinflationary, stuff like that. So it's not that you will have a significant leeway for a stronger dollar. And like we always said that, we also have to keep in mind that US is now running a trade deficit after almost running at full employment, right? There's not a very happy situation, right? So there are too much dollar floating around. So I don't have a great view on how dollar is going to play out. And from that perspective, I would like to believe that probably the dollar strength will stall. Bond yields could still be higher, but that also till the time that it starts impacting the growth of US, and then again that will sort of reverse. So to your question, $10 billion is a lot, and for a country like India, when you had some miss in earnings in the current quarter. Nothing structural when you look at 26 and 27. Also keep in mind that last 2.5 years, the net inflow of FI is zero. So, a lot of money comes in, a lot of money goes out, right? And if you are under-invested in India, where the hell are you going to go?
One would have said just a month and a half back China, but I don't know if that's going to continue to be the case given the result that we're heading towards and whether or not, of course, that economy starts firing on any cylinders at this juncture. One is waiting for what is going to be announced on the fiscal side there. Nothing has come to pass. The question is, how much does policy in the US affect us here in India? And Ajay, I'm curious about what you think. As an investor, primarily in India, how much attention do you pay to what's happening in the US? I take the point that yes, pharmaceutical industry, big exporter to the United States, several companies, and so therefore pricing is an issue over there. I take the point that IT, Infosys, a large chunk of its earnings coming from the United States and several other IT companies. So IT and pharma. A few other sectors one would assume, yes, also has some bearing. But then a large part of what's happening in India is the earnings story here, the valuation story here. So how much attention would you pay to what's happening in the US?
No, it is important, Alex, because over the last 4 years, our exports to the US have gone up 44%. So China +1 might have benefited a Mexico or a Vietnam or an Indonesia much more than us, but we have benefited. So 44% better exports to US, and on those, if a 20% tariff comes in, then you have a re-rating of significant sectors of the market. Second, on immigration, Trump is quite tougher than the Democrats. So the H-1B visas, the spouse visas, the naturalization process, of course, the Indian manpower exports are on the higher end. So hopefully he will give some amount of leeway to the Indian manpower sitting in the US. So it is a change in policy. It is pro-US corporations. It is pro-isolationism. It is protectionism, anti-globalization, less of trade. All those issues have a knock-on effect. The immediate effect you're going to see is China depreciating its currency. It happened in 2016-17. They are going to do that. They're going to bring down the yuan and make it cheaper to offset the impact of the Trump tariffs. Now that will have a second-order effect on Asian currencies, Indonesian to Malaysian to Korean. You will see currency depreciation, and as will the rupee. The other issue will be the Fed will be now wary of cutting rates fast and furious. They will go slowly. So the RBI doesn't cut that fast. That again becomes a drag on our economy. So it is interlinked to that extent, Alex.
It's a fair point. I just want to talk about a few of the numbers that I'm seeing on the screen right now. And if we can pull up that map of the United States just to give you a picture, a snapshot of how things look. Of course, most of the color that you will see on that screen is in fact going to be red. And that really is the story of the hour right now. But most importantly, if you can see some of those states that were highlighted in the run-up to the elections, the likes of Arizona, it's still very close. The gap is actually less than 1%. But in the others, the likes of Georgia, it's pretty much already been called for Trump because the gap is 3%. You have Michigan, where Trump is leading by about 6%. You have Nevada, where the gap is about 4%. You have North Carolina, where the gap, as Ajay pointed out a short while back, it's been called because the gap is about 3%. In Pennsylvania, and that was seen as a very crucial state, to the last day, that was yesterday, you had both Donald Trump as well as Kamala Harris campaigning in Pennsylvania right to the last few hours. There, the gap is about 3% in favor of Trump, and you have Wisconsin as well, where the gap is about 4%. So the way things are looking, ultimately, there's just another few electoral votes that Donald Trump needs to take the walk into the White House. I'm curious about what music he's going to play this time around. We'll wait till that happens, though. Before we call this though, we still had a scenario laid out, and I'm going to ask Harsh to join in to give you some perspective on what things would mean for Indian stocks for a Kamala Harris win as well as a Donald Trump win. Harsh, what do you picked up?
Policy stability, Alex, if Harris were to come to power, but currently looking increasingly likely that Trump will win. If Harris does win though, you could see a renewed effort towards renewables, and that could see some Indian companies, the likes of Avari, the likes of Premier Energies, come to the fore in terms of taking that as a good opportunity. But what if Trump wins, right? Policy stability goes away. You're going to likely see the dollar getting stronger. All exporters will likely benefit if the dollar gets stronger. You will also see possible tax cuts in the US. So any company having a subsidiary in the US likely will have to pay lower taxes, and therefore margins will improve for some of them. In terms of tariffs, you could see higher tariffs, which is bad for apparel companies, chemical companies, anything that's exported to the US, but largely tariffs are applied on these two buckets in terms of exports. A possible insurance coverage dilution, if that were to happen, pharma stocks could see an impact. You have, of course, the higher tariffs impacting Wellspun, Gokaldas, Deepak Nitrite, and the like, but an adverse impact on pharma companies, Sun to Loris, pretty much all pharma companies exporting to the US, and all of them could likely see a bit of an impact as a result of Trump coming to power.
Okay, so a few stocks have been mentioned. Now, Nirav, I'm coming to you on this one. I'm sure that you've done your studies about the implications for the earnings of some of these companies. In that list that we've mentioned or otherwise, has anything stood out to you? Anything particularly that you will change your view on based on a Trump victory?
Yeah, so I've got a very positive view now on oil. I think that's the cleanest trade, right? Because it's pro-oil, and you also want to give more licenses out and therefore push the production of the shale oil higher. And you put that against the construct of the fact that OPEC had a market share of about 57%. Now OPEC market share is down to 47%, right? So all the production cuts have been taken by OPEC, and the benefits have flowed largely to the non-OPEC guys, right? And therefore, it's just a question of time before OPEC buckles in. And therefore, the clear trade is therefore OMCs and stuff like that. So to me, that's a very, very low risk, high return opportunity that is in front of you. Outside that, I just listening to your anchor talking about, some sectors getting hit because of higher tariffs. I'm not very sure. So if you're increasing tariffs on everyone, it doesn't matter, right? So you're as good as you were yesterday. It's just that, it is the US consumers who are going to bear an increased cost. I'm not going to pay anything out of my pocket. I am worried about my market share in that overall game. So that is not very clear. We'll have to wait for as and when the policy happens. Also, please try and understand and appreciate the fact that, your election rhetoric is always very different. So it is not that everyone else is going to keep silent, right? So if you are going to impose 60% tariffs on China, China is a big consumer market for a lot of US companies, and they're not going to remain silent, right? So these are more negotiation tools, right? It's not that you're going to say this is what I decide and everyone has to abide by that. It doesn't work that way.
It's not unilateral, and ultimately Absolutely. We're talking about two of the largest countries and economies in the world.
Absolutely.
In the world, accounting for a very large chunk of global economic growth, right?
So think about it. The largest market cap company in the world is Apple, and if you got some restrictions on Apple's being able to sell something over there, you could lose 20-30% of your market cap.
Absolutely.
And that is chaotic.
It's a point well made. I will take your view though, Ajay, as well. And by the way, I think that we're expecting to see some visuals of Donald Trump addressing the fact that the Republican Party, the grand old party, has managed to clinch control of the US Senate. And this is quite a significant victory because it means quite a bit, as Ajay has pointed out earlier on in this program, for the politics in the United States of America. What you're seeing is a stage, and I think that what is going to happen is he's going to speak about the victory that the grand old party, the Republican Party, has managed in the US Senate. They've done this after 4 years, and they've managed to flip a couple of seats, at least 2 seats, and that's how they managed to win this. But Ajay, your comments, we've had Nirav pointed out that crude is something he's focused on, and of course in the pharma space, one would assume that the counter to what Harsh was pointing out was that some of those pricing pressures maybe will ease out, because the Democrats, I think, have been more focused on bringing down the cost of pharma.
Yeah, but they've not been very successful. If you see, these sounds are made every election, anti-big pharma and all those, but they are big funders of every politician, and they don't get changed. Ours are more generics. They, in fact, help to bring down the costs. So I don't think he will touch pharma too much, especially from India. We are helping them to reduce their burgeoning healthcare bills. So not too worried on that. In fact, I think India is better off with a Trump regime than a Democrat regime, because they keep bringing in the non-existing human rights and religious freedoms and all those issues. In fact, people of Indian origin itself have brought in Kashmir issues, earlier. So all those things go off, and Trump is a realist, and he likes to negotiate. And with Prime Minister Modi and Trump, there is an equation. So we are expecting that strategic relationship of India to continue. There'll be less pressure on India to move from Russia as a big defense supplier. The Democrats were exerting pressure there. Trump is, somebody who negotiates with the Putin. You can expect some movement on Ukraine, some movement on Israel and Iran. All those will be positive for markets, Alex. So still we are compiling the list, because we were not too sure which one comes. And, once this is through. And we must also remember Jan 20th is when he gets inaugurated.
So there's still time.
There's still time, but markets will move in anticipation. Chinese will drop their currency, that I can write and give you. That's going to happen. And rupee will come under pressure. RBI is not cutting in a rush now. All those things will have an impact on us immediately.
We're already at all-time lows for the rupee, and we've already seen some action on the Chinese currency. Gentlemen, I know that I can speak to you for the next half an hour as well to find out what more we can talk about, but let's hold the horses till one of the two enters the White House or at least starts the victory march, if you can call it that. Nirav as well as Ajay, thank you so much for joining in. Pleasure speaking with you on this program. Now, of course, there's a lot that still has to come to pass, and we're not calling it yet, and neither is the United States of America. We've got coverage that extends through the day that will take you through everything that you need to know about the US presidential election. So do stay tuned. This is NDTV Profit.
Market veteran Ramesh Damani puts on the cephalogist's hat to get you the insight you need on the US presidential battle of the century. Will Kamala Harris claim a historic victory, or will Donald Trump march back into the White House?
According to polls, if Biden and Trump were running, I think Trump would have handily won. He was almost measuring the drapes to the White House even before the election.
What are the stakes for India and its investors?
The road to the 1600 Pennsylvania Avenue goes through Pennsylvania this time.
Tune in to US Election Watch with Ramesh Damani, exclusively on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Welcome, you're watching NDTV Profit. I am Mahima Vachrajani. Raymond Lifestyle is in focus after its Q2 earnings, where it did post a muted quarter where revenue was down around 5%, EBITDA was down around 17%, margins have taken a slight hit, and net profit was down around 69%. But of course, this is on the back of a one-off where stamp duty on the demerger was paid as a one-off. But to discuss as to how the quarter has gone by and how things are shaping up post the listing, we are joined by Mr. Sunil Kataria, who's the MD of Raymond Lifestyle, who joins us now. Welcome to the show, Mr. Kataria. Always a pleasure to have you. I want to understand your sense of how the quarter has gone by. It's been a muted quarter, and of course, this is on the back of subdued demand and everything that's shaping up overall. But is this something you expected, and how are overall things shaping up?
Yeah, hi, Mahima. Thank you for having me today. Quarter two was muted for us marginally, and obviously it comes on the background of a bit of a muted overall scenario of consumer demand that we have seen in the country in the last 6 months or so. So I think a mix of, I would say, weak demand, weak consumer sentiments, bit of a adverse weather, and some inflationary impact on discretionary spending. I think that's what really contributed to the second half as larger macro factors.
Right. In terms of margins, again, margins have also shrunken on account of, multiple reasons, like you mentioned, subdued demand, even the kind of inflationary pressures that are going on. But overall, a sense of, a range in which the margins will pan out to be by the end of FY25, your sense of, because margins right now are at around 12.6%, where will they be at by the end of FY25?
So margins, if you see our EBITDA margins are at around 14% right now. So obviously it's a bit of a scale deleverage which has happened primarily. That obviously you lose certain amount of revenue that flow through immediately impacts EBITDA margin. But if you see sequentially, we improved over last quarter. And one thing, the question is, we're very confident that by the end of the year we should be back to scale on our EBITDA margin. So I don't see that as a challenge. We have enough of cost saving initiatives which are there in the pipeline. We continue to focus on improving efficiencies for our business. So I think this is just a scale deleverage issue and nothing else right now for us in terms of margins.
Got it. Two things on the side of P&L side of things. Cost of raw material, first thing, has gone up by 24%. So I just want to understand what are the trends you're observing there. What has caused to this rise in cost of material? And secondly, depreciation has gone up significantly YOY. If we see, it's gone up by around 27%. So what is causing this hike in both of these line items?
No, in fact, if you see, depreciation is primarily the investments that we are doing. We're very focused on investment behind our garmenting business, which we had called out earlier as well, that we are seeing a huge benefit of, if the China Plus One, where our garmenting business has been doing pretty well, and we can talk a little bit more about that. And now we are also seeing that we are very, very well poised for a Bangladesh Plus One, which is happening right now. So we have a total capacity of around 6.5 million units. and we are targeting to shift that to 10 million units because we have one of the best strategic placements in terms of our capabilities, in terms of skills, and in terms of the kind of order books that we are likely seeing coming our way, and already which is some part of it which is already with our way on the back of China Plus One and Bangladesh One. So that's a pure capacity expansion which is happening across our garmenting lines.
Got it. And in terms of right, go ahead, Mr. Kataria.
Yeah, and in terms of cost, actually, we see cost being actually pretty stable and benign, except for flex fibers, which has happened a little bit. And in that sense, in fact, our gross margins have improved over the last year. So I don't see any challenge. I think commodities will behave benign, and I don't see any pressure on that front at all.
Got it. In terms of the new launches, the ceremonial fabrics and the sleepsy, what is the kind of trends you're observing? How is the customer response overall for both of these things?
Yeah. So actually, one part of our transformation journey is to, while we continue to focus on nurturing the core business fabric, is that how do we can drive growth in the core fabric business? So two parts there. One is, in fact, we've done two launches there. One, obviously, which you called out very clearly, is that we are seeing a trend that ethnic wear is becoming big in India. Now, on the ready-made side, we obviously have ethnic experiment, which we can talk about. And then, but we have also seen that there are people who still want to do a stitched fabric, a stitched garment within ceremonial wear. So, for example, the people who still want to get a kurta stitched in a ceremonial kind of a look, feel as per their own size and comfort. People want to do that with bundis. So, we identified this great opportunity, and actually, we've launched first time ever entry into something called ceremonial fabrics. Now, these are very nice, designed, embroidered, fashion colors, more ethnic wear colors, kind of a ceremonial fabrics in which we made a foray just into it roughly around 5 weeks into it. But I must say that initial response in the pre-Diwali period, in the pre-wedding period, I think it's been looking very positive for us. And we're very hopeful that this is a category within our fabrics business, which actually is a new growth area, which we can develop forward as a category leader.
Got it. I also want to understand the trends on the distribution side of things. A lot of retailers that I spoke to and a lot of people in the consumption space also that I spoke to are saying that e-commerce and quick commerce is really picking up. I believe quick commerce is not very relevant to you, but e-commerce, I want to understand right now what's the breakup of your online sales versus store sales, and what are the kind of trends you're observing there? Because e-commerce is really picking up. So are there any strategies in place to develop that trade-off channel?
Yeah, so e-commerce is definitely a channel which we are very focused on. In fact, we built up a new capabilities on e-commerce by putting, a new talent from outside which has come in. So we are building not only e-commerce as e-commerce. We are looking at e-commerce in line with our stores